the leader on the edge devices with smartphones and cars and industrial and other areas. Now we're bringing those technologies to data center. I think as data centers evolve, what becomes very important is being able to do processing in data centers at very low power, and that's something that we've been doing for a long time in edge devices, and we're bringing that advantage to the data center. So very positive reception from customers. I think the hyperscalers are looking for alternatives as we move from training to inference, and as the data center kind of processing changes from using GPUs for everything to disaggregated computing. There's a lot more room for other players to come in and give solutions that are very optimized for low power workloads. And so very excited about what we announced yesterday. I think it's just the beginning for Qualcomm and data center.
Yeah, you've been quietly calibrating your CPUs for this, and now with the data centers, it's sort of somewhat monumental to folks, because now we're going to talk about non-handset revenue. There's some really big projections going forward, on the numbers overall. The CEO also noting how confident you are in the forecast. I mean, by 2029, we talk about $40 billion. Tell me a little bit about some of the forecasts on that, and so much of it, $15 billion from the data center.
Good morning.
Alone that you're speaking of.
Yeah, it's pretty incredible. I think we're going to have we had a target of 2029 revenue for non-handset.
So markets initially popped on PCE, came out year over year, actual 4.1%, forecast 4.1%. All right, so we're just watching as Micron continues to hang out near the 1250 level, just below it. Almost sold some call credits up here. Yet again, implied vol, especially on the Q side, if you read the gamma update, implied vol, realized vol is at extremes. And hard to judge these. With the implied vol as high as it is, you'd want to sell these overpriced calls, but it's hard to judge. Almost sold the 12. Let's see, the 1150s. No, I was looking at the 1250s, right? I believe. Anyway, there wasn't enough premium for the risk that I was going to take, and good thing, because the Micron just went ballistic. The markets are up, but it's very risky because in order to sustain these high implied volatility levels, the money's got to come from somewhere. So are they going to keep buying up here? I think it's an opportunity to reduce risk personally. That's just my thing right now, just my personal circumstances, because I have a lot of long positions. You do know that 2 days ago, towards the end of the day, I took a put fly, just in case we lost the 50-day moving average. Doesn't look like that's going to be the case. So those are for the end of the month. So I'm not going to do anything with them. SPY currently is trading up. Okay. Trading back 738, well above its 50-day, but still inside the wicks from Tuesday and Wednesday. All right. So I do have a put. I do have a put fly on. We talked about that. This is the put fly that I have. Okay, so I have the 725, 700, 675. So the way a put fly works is you sell twice as many in the middle, and you buy one each of the wings. Okay, so that balances out. So you have two of the 700, 175, 725, 675. So I have five of those. They were 270 when I bought them. And the max profit, if for some reason this started to fade towards 700 and it pinned at 700 for expiration, the maximum profit would be about $4,000 per. So that's about $20,000 right there for a hedge against my positions. I'm hoping that that's not needed and that we just keep going and head back up to 760. and then I can take some profits off into strength and reduce my risk. That said, July is seasonally one of the strongest months of the year, so I was kind of hoping for some consolidation at least. It looks like that's what we had for 2 days. 2 days of consolidation. And Micron came out with earnings and just blew it away. So let's see what Micron had to say. Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 7:23 on the East Coast. I'll be here with you until 4. Okay, let's see what they said. Fourth quarter earnings expected $30 to $32 per share. That blows away what they just reported. They reported $24.89. They're guiding to 32. Wow, that's impressive. Revenue 42.5 billion. Revs right now are 35 billion. So they're looking for a $7 billion increase for the next quarter. All right, Micron's record fiscal Q3 fiscal results and even stronger outlook for Q4 reflect the strategic value of memory in the AI era. Qualcomm also up right now. Qualcomm CEO is speaking. CFO and COO. So Micron's up. AMD was up. Last time I looked, AMD was up. Okay, pre-market, there's AMD, that orange box, pre-market level, headed back up to the highs. Let's see, what's Intel doing? Intel's climbing too. Intel, of course, the Pelosi's have been in Intel since the end of May. All right, they go deep in the money. They go deep in the money calls, and then at some point they take profits and then buy shares. They did that with Google and a few other names, NVIDIA. Okay, IWM's on the move here. IWM. I have the 300, 305 call spread. I don't have a big position, but we're knocking on the 300 level again. We should push through right through 300. If we see the 10-year yield continue lower, okay, as we can see, 10-year is losing the lower Bollinger Band and the 50-day moving average. We're starting to slide down that lower Bollinger Band. Okay, so this is huge. TNX is moving lower. Okay. Nokia. Glad I got back into Nokia. What do I have in Nokia? I have a small position in Nokia, I believe. I wanted to add to it. Let's see, Nokia. All right, I only have 10. Actually, I have 10 of the August 15, 20 call spreads, and I have 10 of the 14 Decembers. Those 14 Decembers are looking good. Let's see, Nokia this morning. Nokia. All right, that's gapping up. So I have 10 of those 14s and 10 of the 15-20 August spreads, 15-20. So I would think this pullback refreshes the trend, and Nokia continues, bounces off this level. Volume looks good. MACD is about to turn. Okay, we got about 3 minutes to go. I don't want to miss the opening bell. I got 2 minutes, 10 seconds to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. I trust you had a good evening. If you were watching any of the World Cup matches, Okay, Mexico beating Chechnya. Chechnya. 3-0.
All right, Akash Palkhiwala, thank you so much. Chief Financial Officer,
Czech
Chief
Republic.
Operating Officer at Qualcomm. It was wonderful to speak with you today. I'm so glad we got to chat, and we'll get some updates soon as well.
South Korea won.
All right, let's get you ready for the
All right, so looking good. We got about 2 minutes. What's going on here? What happened to my? Did we slow down?
Pretty exciting to hear about the transformation that the company is making when it comes to this bet on the AI build-out.
Okay, I got.
And being able to meet demand.
Okay, less than a minute to go. Seconds to go.
Because that sometimes can be just the bottleneck story.
Okay, there goes IWM. Okay, I'll be taking some profits off, so I'll be a little quiet here this morning. Got a lot of profits to take off. I want to reduce my risk into this pop only because the Qs, realized volatility, and implied vol are off the charts. I don't know how much more they can get out of this. How much more lemon juice? Intel's up. Okay. We got seconds to go here. Seconds to go. Okay, IWM's up. 10 years down below yesterday's low. And we're open. Okay, folks. Take some profits off here. Let's see. Okay, Home Depot. Okay, IWM looking good. IWM. Oh, I bought the 305s. Okay, I have the 305 310s on IWM. I have some of those 300 305s left, but I bought some August 305 310s. Forgot about that. Okay, so what's Microsoft is off, Apple's off. The New York Fangs don't look that hot. Tesla's starting to pop. Tesla going. Tesla popping. All right, SpaceX watching that.
There we go. We are off on Wall Street. A different story now. By the way, this has been the best quarter for stocks in 6 years when you look at the S&P and the Nasdaq. I mean, I know we've had some selling earlier in the week, but now, thank you, Micron.
Okay, IWM. Profit taking. CBRS moving lower. There goes IWM. AMD, a little profit taking. A lot of profit taking this morning. Okay. Profit taking. Home Depot. Home Depot is looking for the follow through. Home Depot. Let's see what Micron's doing. Micron. Okay, big gap up, obviously. Micron. Almost sold to, what was it, 1225? I forget what the hell I was looking at. I was looking in the 1200s. Premium wasn't enough, though. It's a good thing because definitely would have had an issue with Micron. Micron looking good. Intel gapping up big. Intel. Okay, I got the 140, 145s on Intel. We'll follow Intel for a minute. Okay, that voice is just, I don't know, it goes right through me. I don't know what it is about her accent. I love Australia. Been there once. Let's see, IWM. Intel. Okay, Intel, watching Intel here. Intel threatening the highs. I have the 140, 145s for August. Okay, Home Depot, looking for Home Depot to continue, of course. That's a longer-term swing idea. DoorDash, let me take a look at DoorDash. Before I do too much, let me just look at the hedge flows, the way things are setting up. Okay, the way things are setting up right now. Okay, a lot of negative gamma below, so we want to stay above this negative gamma. All the New York FANGs are down right now. Futures pulling back on the gap up. All right, the 10-year yield moving lower. That's critical. The 10-year lower is critical for small caps. We want this lower. I was looking for a move below 4.4%. We got it finally. Okay, so here's a 10-year yield. Okay, we're below 4.4%. I want this to continue to move down towards the 200-day. That'd be good for small caps. Small caps outperforming IWM. Okay, gapping up. Okay, there goes AMD. AMD's got a bid here. AMD looking good. AMD on the move. Okay, looking for a bounce. Okay, we'll keep an eye on this for a sec. Just notice all of this red down below. We want to get some positive gamma to start building. Okay, can't really see it that well. Let me just go to a white chart. All right, you see the negative gamma there? We need to push this up. We need prices to push up because volatility picks up down here and dealers will start selling. IWM. Okay, IWM is pushing up to 300. IWM.
Levels that you have to squint and say maybe it's getting over not reflected in multiples. No. In any way that would be the equivalent of what we saw in the late 90s, certainly. Not to mention, of course, the typical conversation we have around the quality of the companies now doing the spending versus that. No, not in the multiples, and even not really in the rate of
AMD on the move. AMD.
Right? I mean, it's been great, but it's not been tripling.
Okay. Intel coming out of a squeeze, trying to break out above 140. There was a lot of call buying, apparently, what people were saying. Hedge funds buying Intel and AMD. There goes AMD, looking really good. AMD.
I know that some people, I think Citi for next year says 400 is in sight for S&P earnings. So
AMD looking good.
8,000 is 20 times next year's earnings if you believe you can get there. I think one of the issues is that the earnings are still very concentrated in terms of the growth and the margin expansion and all the rest in semis and to some degree energy. It's not, even though broadly there's earnings growth, it's mostly
IWM. Still going here. IWM. AMD is on the highs. IWM breaking through 300. Looking really good here. Oh. US 10-year. US 10-year. Lower.
Engineered a lower memory intensive way of doing the things we think we have to do. The secondary market versus kind of the secondary market for GPUs. I mean, if you're renting some of these things, the prices are rolling over. Yeah. So I mean, obviously, we still have that day. By the way, one of the things on Micron, Citi is pointing out that they said they're going to return 100% of excess cash generation, right? And up from 50%. Now, whatever they consider excess cash, that's a question. But it's like this fiscal year and the next two.
Okay, there goes. All right, so IWM is blasting higher.
But again, back to the larger question. I mean, the manufacturing footprint updates, Idaho on track for first wait for output mid-calendar 27.
upstate New York. They broke ground in January. Not sure what more they've done there. Taiwan, Virginia, Singapore. And it's going to be a little while, as they say. Guys, staying on the theme of AI, I did want to come to Alibaba this morning. Shares of which are down about 3.6%. A story, Bloomberg story originally, Anthropic accusing Alibaba of what they're calling a large-scale effort to illicitly access the Claude artificial intelligence model using what they call thousands of fraudulent accounts, perhaps as many as 25,000 accounts. And doing so in order to basically, they have a name for it, distilling what they can get from the model to help their own models, essentially.
I'm just taking profits off.
28.8 million exchanges with Claude between April and June. And again, these almost 25,000 fraudulent accounts doing those exchanges. And Anthropic points to previous efforts by Chinese developers to basically take as much as they can, distill it, and then use it for their own models. Obviously, Alibaba.
Okay, 10-year lower. IWM still going. Looking good here, IWM. AMD looking good.
Just goes back to sort of where things will come in terms of tension between the Chinese and the U.S. And I do note Alibaba shares are down. Haven't heard a response from Alibaba at this point, but we'll keep an eye out for that as well.
I mean, it was even going back to the original kind of deep sea, jolt that the market got. That was the accusation, right? That the open source models are the lower cost.
Cerebrus lower. Okay, looking for the New York Fangs to bounce. These are all lower right now.
Elements of the frontier models that were created here. I don't know how that works. I don't know what's proprietary and copyrightable and enforceable.
SpaceX looking for push higher. Cerebrus down again. Today, Cerebrus.
By the way, we still have not heard that the U.S. government has allowed Anthropic to move ahead with the release once again.
SpaceX back. It's still hanging out near 155. Okay. Intel off the highs. Intel.
Briefly were out there, and then the U.S. government said no. Too dangerous at this point in terms of what they can do for jailbreak, so to speak, basically finding code that can be exploited.
Netflix bouncing. Microsoft making new lows. IGV, there's a lot of puts being bought on IGV. Speaking of being bought, let me start up Discord.
I mean, they're the spenders as well. As we watch, continued weakness. In fact, I would point out, I mean, Amazon's down almost 3%. Alphabet's down another 2%.
Microsoft's down. Yeah, giving back some of its. It's tough to know, if they're running away from something or towards
Okay.
A pre-IPO opportunity.
S&P fading. All right, so institutions taking the opportunity to take profits off the table. That's what I would be doing, reducing my risk. Implied vol for the NASDAQ and realized vol are at extremes. Hard to see how this can just keep going like this. Okay, we got negative gamma below. So prices can accelerate to the downside because we have no purple below until we get down here to 7,200. Okay. AMD, big reversal on AMD. Home Depot continues to drive higher. That's making me happy. AMD, big reversal. HD, Home Depot, big reversal in the opposite direction. Home Depot. Okay, Home Depot looking good. Okay, we're headed to that 200-day. After that pullback that we saw on Tuesday, I didn't think it was going to be this fast. Yesterday was a really nice day. Had a lot to do with what the president was talking about with the housing and some bill that they were doing. I have no idea what the bill was about. I just know it was about housing. I don't know specifics, but everything moved higher. Everything in the building group, like Toll Brothers, Pulte Homes, PHM, all of the builders continue to show strength. Builders, TOL, PHM, KBH, etc., Airbnb, and HD Lowe's. All.
And they also point out those repurchase requests concentrated amongst what they call a small number. You see it there of non-U.S. investors. So that's where we stand on private credit, guys.
Okay, and we had a theme with travel as well. Let's take a look at travel. Delta continuation, travel, and leisure. Another focus group. DAL, AAL, etc. BKNG. Let's see if that's back on the top of the list. BKNG. I always think Burger King when I see these symbol. BKNG. Inside Day. Marriott, Hilton, Marriott. That's Macy's. Marriott's MAR, right? MAR. Hilton, HLT, RCL. Okay, RCL looks good. Cruise lines. RCL, NCLH. I'd stay away from Carnival. They're getting a lot of bad press. Cerebras continues to move lower. That's not helping. It's at 171.
Nobody's going to say, oh, yeah, it's time for Jamie Dimon to give us a real plan here in terms of his exit. So we'll see if we get another round of potential successors at some point. Let's take a look at our friend Jamie there.
Cerebras continues to move lower, taking out stops.
For sure, yeah. I mean, they're getting rich on their recent history in terms of valuation.
Uber is moved lower. Uber, that's a Pelosi play. Uber was up big yesterday, giving some back. Probably some profit takers that don't know about the pattern day trader rule. They held over and swing, looking for this to push higher. Pelosi's have the 50 call for March. That's a 90 delta, or was a 90 delta. It's probably about an 88 right now. Uber, Home Depot, of course. Home Depot looking good, following through. Travel and leisure, folks. Watch travel and leisure. The airlines, cruise lines. Again, stay away from Carnival. The builders look good. Industrials are working. So watch Caterpillar, John Deere, etc. Caterpillar gapping up. John Deere. Okay, all these look good. 3M gapping up. Okay, I'm probably going to add to Home Depot. Intraday, I'll wait for a ABCD pattern. Okay, I'll wait for a little pullback. Home Depot. Intel. Okay, a lot of profit taking. It looks like short-term traders taking profits, creating a lot of noise up here. Looking for this to move through 140 eventually. IWM. Let's see, IWM. Sorry about that. Okay. IWM gapped up, pulling back in a little bit right now, but watch the 10-year yield. If this continues lower, that continues lower, the 10-year yield, that's good for IWM and for tech eventually. Okay, so New York Fang, you recall what New York Fang looked like yesterday. We had already lost the lows, New York Fang. Okay, so we are back down to this level. 200 days right there. Not too far away from an opportunity level. All right. So if you're taking risk off the table, like I've been suggesting, I don't know your individual circumstances, but if you're taking risk off and you're collecting cash, we're going to have a nice area to start buying. We'll start looking at SPXL. All right, we've lost the 50-day. I'll look at SPXL. Right now, the short is working. SPXS. Okay, the short is working. If you don't want to buy options, SPXS works. All right, let's see the 60-minute. All right, back above the S&P 500. S&P 500 again testing that 50-day. I think a lot of smart money is aware of the high implied vol, and Qs are even worse. The Qs are much worse. Okay, because they've outperformed. Realized vol and implied vol are so high. So looking for the Qs to pull back. If the Qs lose the 50-day, this could accelerate pretty quickly. Right now, Builder's First Source, that was one I was looking at yesterday as well. Builder's First Source, day 2, coming out of a squeeze. Builder's First Source mentioned yesterday, day 2. Builders, BLDR. B-bands. Day 2. Builder's First Source. Yeah, all of those look good, Frano. Now, it could be that we're going to see a lot of noise today. All right, so New York Fang doesn't look good, though. Need some help. Need some short covering. Intel, big drop on Intel from 140 down to 133, a 7-point drop. Used to be Intel didn't move at all. Now Intel is like the rest of these tech stocks. They can move a lot. All right, AMD, looking at a buy in AMD. But probably going to wait, right? Probably should wait. See what falls out. IWM should continue. IWM, a little profit taking on IWM. Watching that for a bounce. Thanks to a lower yield.
Meantime, S&P remains red, and we're once again on SCOTUS watch. It's a decision day, and session's getting a little bit long in the tooth. We do expect some of these influential decisions. Potentially also regarding Fed Governor Cook. We'll look for that at the top of the hour.
Okay, so New York Fangs are off. Let's go take a look at the S&P equal weight, and we want to check breadth too while we're at it. Let's check breadth. Actually, not bad. Breadth is not bad right out of the gate. Okay, let me see how many stocks are advancing. There's money flowing into other areas. We've got 358 stocks advancing. Holy moly. Core 1M is at 1076. So they're crushing the overpriced calls in the big tech names. That makes total sense. All right, so we could hold on to this level as other stocks rotate in. Let's go take a look. All right, so we got mid caps, small caps doing well. You see, NASDAQ doesn't look that bad. We still got 56 stocks advancing. It's just the big tech names from the New York Fang that are doing it. We just looked at that. Okay, the New York Fang is what's holding us back. Okay, so if these bounce, that would help. Doesn't look likely at the moment. Looks like it's headed to the 200-day, the New York Fang Index. We got 362 stocks advancing, so we've got other sectors in play. We just talked about travel and leisure and the builders, so you should be focused on those areas, right? Because this looks pretty good. You would never know the way the S&P looks. You would never know that. So you got to know what to look at, right? So that's what I'm here for. Not that I know everything, but I do know how certain things work, like the 10-year yield. The 10-year yield drops. That's going to have an impact on IWM. Okay, so IWM is up here at the highs, all-time highs. Made a new all-time high this morning. Will we crash below this level? Not likely. Not if the 10-year continues to move lower. The 10-year is below the 50-day. So find an opportunity for IWM. You have to, don't buy the, uh-oh. Uh-oh. I think I lost power. Lost power. There's a new home probably getting connected right now. Let's see.
Eli Lilly and Novo Nordisk preparing for millions of seniors to become eligible for obesity drugs. Angelica Peoples is at our headquarters, and she has details on that story. Angelica.
Well, starting July 1st, around 20 million seniors will become newly eligible for GLP-1s. And so under this program called Bridge, some Medicare beneficiaries will be able to get a GLP-1 for weight loss for $50 a month. Now, they have to meet specific clinical criteria, and it could take some time to get the word out and see that awareness translate into prescriptions. So I talked to executives from Lilly and Novo yesterday about their plans. They're anticipating questions from doctors and seniors, and they're going to be closely monitoring for any issues with that rollout. Now, in terms of their pitch to seniors, Lilly and Novo have slightly different approaches. Here's what their CEOs had to say at an obesity conference earlier this month.
I think we have a very strong profile product specifically to that population, both in pill as well as injection format. So
Okay, did we lose the stream? Did we lose the stream?
Percentage-wise than my competitor. On top of it, kidney, liver, heart.
I don't know. My backup power, that held up. Let me see here. Let me see if we're still going here. Mic check, mic check. Still going here. Oh, yeah. Okay, cool. All right. So I thought with that power. Okay, so let's see. My backup power kicked in. So we still got battery power for now for at least a couple hours. There's a new home right across the street, a couple of houses over. Maybe they're, I don't know, they're rebooting shit, or I don't know what the deal is. I think they could bring another house online without turning everybody else's power off, right? I don't know if you have any line workers on in the room. All right, IWM, big fade on IWM. Okay. That was weird. Don't know exactly what just happened. Obviously, I'm still broadcasting. All right, let me bring Thinkorswim back up. All right, so watch the bounce here in IWM. My apologies, that threw me off here. 90730. Okay, Intel, big drop on Intel. Holy crap. Intel crapped like $13. Holy smokes. Wow, that was a big drop. Somebody got out of Intel in a big way. Okay, looks like Thinkorswim, DoorDash, everything back up. All right, just got finished saying that we had 368 stocks advancing on the S&P 500. So what I wanted to show you was hey, I already showed you the equal weight, right? Equal weight index. All right, showed you that. And we're making new highs. All right, new highs for the week. Headed for all-time highs. Okay. It's just the New York Fangs that are getting sold right now, and some tech. All right, looking for bounces. This is creating a lot of noise, unfortunately. The big tech being sold. HD continuation, SPY. Okay, so those SPY put flies are doing okay. SPY. Do I want to take any of these off? No, it looks like we're going to lose it here. Looks like we're going to lose it. Okay, so I have SPY put flies that are up $100 per contract per fly right now. That's $500. Thank you. Only have 5 of these. I was going to add a 5 or 10 yesterday. Never got around to it. Not a big deal because most of my options trades are out in August and later in the year, and some are next year. Okay, let's see what else is working here. IWM. Okay, I want to jump back into some IWM, or rather, to be more specific, to add back to IWM. Let's see. Sorry. That power outage, or whatever the hell it was, threw everything off. Okay, so a big bounce in Google, big bounce in Meta, short covering on Microsoft at the moment. Microsoft almost got me to bite yesterday. I said, let's wait a little bit longer. Let's wait a few days. So we didn't bite on Microsoft. Futures up big this morning, thanks to PCE being in line with what was expected. Yields are moving lower, so that's going to help out Mr. Warsh. Okay, we're starting to bounce here. Starting to bounce. Again, I could take these put flies off right now for $100 per contract, but it's a hedge, so I have to think it's not a trade, Benny. It is a hedge. I have to remind myself. As you get older, you have to remind yourself, write stuff down. So that's looking pretty good. So on the bounce, I'd probably think about adding. If we get back above the 50-day, this would be day number 3. Wow. Testing that 50-day. So hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, June 25th. Can't believe the end of the month is coming already. Netflix is on the move. Yesterday, Mike, Mondo, you took Netflix yesterday. This is on the move right now. Netflix, there goes IWM again. Netflix day 2. Yesterday we were reversed. Let's see what happened yesterday. Okay, S&P towards the end of the day, right, Mondo? Towards the end of the day, we sold, but we had a nice little rally midday. So IWM looks like it's going to pop again. IWM popping again. Netflix popping again. Netflix popping again. We have over 368 stocks. Travel and builders, real estate, and industrials like Caterpillar, Deere, 3M, etc. PHM, KB. Bullish rotation. Okay. That looks good. Looks good, actually. All right. So I was tempted to take profits just now. I was up $100 per contract, but that hedge, got to keep it in place just in case this gets squirrely. Look at Intel. Intel dropped, what, 13, 14, 15 points? Look at Intel. Check this out. Look at that move on Intel. Somebody slammed the elevator door, dropped. Now it's starting to bounce. Look at this. Big outside day on IWM. Somebody said something. Okay, so Meta is bouncing. We're going to get Meta back above the 50-day. That's way up here. Okay, so right now Meta is just a day trade if you're going to take it at all. Netflix, day trade if you're going to take it at all. Maybe they start to build a base down here. 75 was a previous low. Okay, 75 was a previous low over here. We went below it. You can make the case for a W pattern. The bear is still in control. So once the bulls wrest control, we could have a multi-month rally. I'm looking at Netflix once it starts to show signs that I can get in with a good risk reward and I can have a stop that's just below my entry. Not there yet. So it's just a day trade for now, but at some point we're going to be able to ride this back up. Okay, here goes the S&P starting to turn up. S&P. Okay, S&P back above the 50-day. Okay. Lots of noise. There you go. There's a big bounce. IWM, big bounce too. IWM shaking the tree very hard. We're at all-time highs. If you have IWM, you should keep an eye on the 10-year yield. If the 10-year yield is moving lower, that's one ingredient, but it's one thing that you should be paying attention to. Watch the 10-year yield. If that continues below the 50-day, it already dropped below 4.4%. That was my target in the weekend video. I told you that if we drop below 4.4%, that IWM would take out 300. Okay, and that's exactly what's happening. Okay, we're taking out 300 and all-time highs. Notice the Bollinger Bands are starting to open up. I don't think a lot of people are paying attention to IWM outside of some of the trading rooms, people who do this professionally. The average Joe on StockTwits, I don't think, is trading IWM. They're looking at SPY or the Qs. If they're a little more advanced, maybe they're looking at IWM. SPY's holding on to the 50-day, the Qs. I tell you, I don't like the way the markets are acting right now with implied volatility where it is for the Qs. Qs is like 100% risk reversal rank. I believe it is. I think that's what Brent said. All right, we got a nice bounce here. Okay, notice all the white area to the right. Towards the end of the day, we got a lot more negative gamma. You see how we started out the day with a lot of negative gamma? So we had that big swing. Red means high volatility. It means prices can move a lot. Okay, if you're not used to trading this kind of swing, it's better to just kind of sit back and wait for the trend to develop. If we get into the purple zone overhead, prices are going to slow down, but they can start to grind. All right, and if we look at prices on the left, okay, we can start to see if I go to net OI, you can see these big levels, right? See these big levels sticking out right there is a resistance level. Here's another one up here at 7,500. That's a 99 percentile. It's a very big possibility that we go scorched earth and heads towards 7,500. Okay, so just be aware of it. Do we go scorched earth? Okay, notice that 99 percentile level up there. Only for you. Our house is a very, very, very fine house. Got Crosby, Stills, Nash and Young in my head. Watching a video last night. You know those videos where they do a reaction to, it's kind of fake. I don't know. I've never seen this, never heard this band before. And they have this reaction. I don't know how they make, why they make these videos. I think they make some sort of commission. I don't know. What's Finney talking about? He's just yapping away again today. 99%. Talking to himself. Okay, R1, R2. R2 up here. Okay. Okay. All right, so can we go scorched earth? Okay, so we got 7,400, 7,500, 99% level. Okay, what are we doing here? All right, we started rallying, okay? Only for you. What a great album, right? CSNY. A lot of people never heard of CSNY. Okay, let me see what I got here. Oh, I lost my there it is. Okay, sorry. Talking to myself again. Okay, big reversal. Look at Intel. Look at Intel. That's worth a shot. Intel worth a shot here. Yeah. Okay. Our house is a very, very, very fine house with 2 cats in the yard. Life used to be so hard. Now everything is easy because of you. Do I light the fire? Our house, CSNY, about making your life simple. We get so involved with everything. We don't step back. It's always a good practice to go out in your yard if you got one. Take your shoes off and just walk barefoot in the grass, like when you were a kid. Remember that? What's Vinny going on about? I'm just watching this market reversing, shaking the tree. IWM. IWM doing exactly what you thought it would do, right? Big shakeout. A lot of noise in the market, a lot of volatility, a lot of opinions. I'm just watching price and knowing what the 10-year is telling us, right? The 10-year is telling us if this keeps going lower, okay, this is telling you that maybe Warsh doesn't raise rates. That was the big concern last week, right? When he reported on Wednesday last week. So maybe we don't raise rates. Inflation come back. PCE was flat. 31.5. That's what they had forecast, right? Wasn't that what it was? Apple Electronics industry facing unprecedented challenge. Okay, Apple, don't like to hear that kind of news. Okay, where did that go? PCE. All right. Okay, so watch your yields. Okay, Intel, big bounce. Okay, traders no longer fully price a quarter point Bank of England hike this year. All right, so we're hearing a lot of news about no hikes. German IFO expectations actual 84.1 versus 84 actual estimated. Japanese chain store sales year over year actual 3%. Have you looked at the Nikkei lately? Have you looked at the Nikkei? Anybody out in Japan trading? I know we have a couple of customers, members that are in Hong Kong, based in Hong Kong. Japan, I think we had a couple of members that went back to Japan. So making new highs. The Nikkei, okay, IWM back up to the highs. Intel, all right, Intel worth a shot there. Very unusual for Intel to pull back like that. So Intel, let me see what I have on Intel. I probably want to add to Intel on this little dip here. Dip, 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 dip. Do, 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 do. Do, 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 do. Do, 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 do. 140, 145. All right, buy. Vertical. All right, so I got a nice little bounce in the S&P. Futures back up. IWM bouncing. S&P holding above the 50-day. Nice round trip so far. I'm sorry if you're trying to get a hold of get my attention. Intel. All right, so somebody's selling the July 135 puts. Sell to open. All right, so that's creating support for Intel. Okay, I added to Intel. All right, the 140, 145s for August 21st. I got $1.70 fill. Looking for a big bounce. I'm not going to add a whole lot. The markets are still acting very, what's that word? I heard in a movie. Hinky? Never heard that word before. Hinky. Who says Hinky? What movie is that from? Rob Hood probably knows. Rob Hood's like a movie aficionado. Hinky. From what movie? The Fugitive. The Fugitive. Johnny Lee Davenport as Marshall Henry. Hinky. That's where it's from. That was a good movie. The Fugitive with Harrison Ford. Yeah. The Fugitive. I watched the one with him. Watched what is it? 8 Days, whatever it is, with Anne Hesh. Six days, 7 nights. 6 days, 7 nights. Yeah, that was a pretty good movie. Pretty good movie if you're interested. Comedy. All right, so watching the S&P with the bounce. Okay, we're looking at hedge flows. We know that we've got 7,400 as resistance and 7,500. If we run to 7,500, that could be a big payday. SPX 99 percentile at 7,500. Big payday. Lottos. Can't get this song out of my head now. Only for you.
And investors look pretty optimistic too because we're seeing the shares higher. Joining me now for more on Qualcomm, Patrick Moorhead, more insights and strategy founder at CEO Analyst. Good to see you. Thanks for being here. I think that last, you were at Qualcomm yesterday. I think that last question is the question. There's a lot of true stuff there. Why are you guys throwing your money away? And I guess it's just because one piece.
Imagine if we run all the way to 7,500. You know what? Let me take a spread here. S&P. What are the 7,500s going for? Lottos. S&P Lottos. 25. Those are 25 cents. Those are 25 cents. Oh, boy.
We don't know the pricing, but theoretically, or at least on paper, it should be lower cost, it should be higher efficiency. It is right now what the industry
I apologize for my singing in the background. And I did not even have any Micron. I had sold Micron at 530, so I had to watch you guys jumping up and down in the room last night. Happy for you, though. Pretty small trades though. Let's see what's right there right now. Let's go here. Let's go to Gex. 7,500. That's 1.3 billion. It's only about 2 billion that's traded today so far. We dipped a little bit. Now we're bouncing. Do we follow through? Okay, there is a 98 percentile. It's 74.50. 74.50. More likely we get to 74.50 if we're going to rally at all. Intel, looking for a big bounce in Intel. 50-day looks good. S&P. Okay, I'm going to take a couple-minute break. Try to shake this song out of my head. I'm your host, because of any coming chief from theclosingprint.com. It is Thursday, June 25th. We had a big dip there. Markets were up quite a bit this morning. We're still up 15 or 20 handle, whatever it is, 15. We're off the best levels of sessions, obviously. Watch IWM, the 10-year yield lower is helping IWM at small caps. We've got the equal weight.
Everybody had asked, why is Qualcomm an automotive? We've got NXP, right? We have Renesas with all these different companies, and now they announced that they will be the largest automotive chip manufacturer on the planet in 2 years, right? And I think IoT, when the NXP acquisition failed, people said, hey, you don't have that downstream channel, which they didn't. So they just built it. So they do have a track record of diversification.
Okay, I got to take a couple minute break here.
Will be smartphone. And listen, investors want to see it quicker, which I totally understand, but they're on a path and they demonstrated a successful track record of diversifying.
Going back to the build-out conversation for just a minute, that is building out chip capacity. I want to take it to Micron for just a minute, because while you're here, I got to get your thoughts on that one. And I'm just like,
All right, I'll be right back. Give me a couple of minutes.
they kept eating, and you're like, wow, how can they keep eating about this type of magnitude? Is the memory chip business just, it's a different business now? Like, it's not a cyclical business anymore?
Well, it is very strategic because it is, one of the big gatekeepers or blockers of advancement. The one thing that I do want to point out is Micron, kudos to them, they grew their orders per number by 2x, right? And the stock is trading today, but their revenue increases were not from an increase in volume. They were charging their end customers more. And I think we all have to ask, how long can you continue this?
Well,
Some say 27, some say 2030.
well, a lot of those contracts are locked in for 5 years now, that they're going to be charging some of the customers some of those prices.
Yeah, that's right. And by the way, the same long-term agreements that they have, they seem to be fungible, right? They even renegotiated pricing with customers. They had LTAs, because LTAs are
Long-term agreements, yeah.
long-term agreements. It's not a lock-in on pricing. It typically has a shelf, but we can see the same reaction if China gets online with a lot of memory, not HBM, but things like DDR, lower performing type of memory. We can see prices go down significantly. And then,
But do they make that kind of memory now?
they do. A company called CMXT is very much in line. You've got Lenovo that's already qualified. You have Dell and HP that are going to qualify this.
What do you mean by going to qualify?
Qualifying is kind of the step before you buy it, right?
you have to make sure it's high quality, it's high performance, and that takes a while to make sure that it's reaching those quality metrics. So qualification is the precursor to putting in big orders. So again, not taking any away from Micron performance, but it's important to know how they saw it. They didn't sell any more units. They raised prices on their customers. And
well, they can't sell any more units because they're making as much as they can make.
that's exactly right. Very different though from if you look at the path from NVIDIA over 5 years. They just didn't raise prices on everything. They increased the amount of square millimeter of silicon, okay, that they sold. Margins were 70-ishes, kind of ebbed up, but it was not from raising prices on the same density of chips.
Gotcha. Okay. Good distinction.
Yeah.
Pat, thank you so much. It's good to see you.
Thank you.
Coming up, the Fed's preferred inflation gauge giving us a fresh read on the economy. We'll get into it next.
Look at Amy, working hard now so that future Amy can buy her very own boat.
Wait, sorry, the boat's great, but am I wearing culottes?
So you love your culottes.
It's lemonade o'clock. What did I just say? Cheers o'clock. Ew.
Here's to protecting your boat and RV 24/7 as part of your home and auto bundle.
So I hang out with my insurance guy?
Oh yeah, you two have a podcast and everything.
Awesome.
What if you could print every idea to life? Print your possible at thisprint.com. If you could awaken your space, what would that look like? Feel like? Rooms that let the light in. Nooks that feel like a deep breath. A true retreat that says, welcome. Stay a long while. This season, discover all that's fresh and new, crafted with intention, designed to renew your space, and beautifully made for life. Front Gate.
All right, IWM back up to the highs. Big shakeout this morning. Intel, that one dropped like a rock. A big trade, selling some puts down below to create support. What's SpaceX doing, by the way? SpaceX, need that back above 155. S&P 500. 7,400, 7,450 coming into view, 7,400.
Inflation gauge for PCE climbing 3.4% year-over-year in May. That's the highest since 2023. It was in line with estimates. Joining me now is Diane Swan, KPMG U.S. Chief Economist. Diane, it was fantastic to see you. I'm curious how you would characterize the inflation picture now, not just from PCE today, but from all of the other data that you have access to.
I think what the biggest information is that this is hot and sticky, and we're in for a hot and sticky summer for inflation. Even as oil prices come off and prices at the gas pump come down, underlying inflation is still too high. price stability. And what's important is not only today's inflation data, which showed that service sector inflation remains extremely hot and is accelerating from already elevated levels. That's something we saw prior to the conflict in the Middle East, and that's why the Federal Reserve has turned so hawkish and started to focus on rate hikes instead of additional rate cuts this year, which is what exactly we think they're going to do. We expect 2 rate hikes in the back half of the year. But more worrisome are announcements today that we're seeing the sequencing of AI is a problem. Costs are showing up before the productivity gains have been scaled to alleviate the pressure on inflation. In fact, everything from computers, laptops, smartphones to game consoles are going to be going up in price because of a shortage of memory chips that go into those. That is a sector that had been deflation, falling prices for decades. So now you have to offset that with declines elsewhere to get to price stability. We're just nowhere near that right now. And we're more than 5 years in on inflation. The Federal Reserve isn't the only reason for why we have the inflation we do right now. I think every institution that is challenged to deal with inflation.
I just have a question for you. First of all, you talked about the prices going up. Apple, of course, raising prices across its products today. Typically, in the past, when you see those kinds of increases, the Fed looks through it, as they say, right? The Fed says this is a supply issue. It's going to be temporary. We're not necessarily going to react to it. Do you think that approach should change? Do you think it has changed?
Has changed, and it should. What we saw pre-pandemic was the inertial of inflation being low, no matter what happened to energy prices. In fact, we had a surge in energy prices in the wake of global
Home Depot.
and leading up to the global financial
Home Depot looking really good here.
That was not enough to raise rates for. We had to actually cut rates, and in fact, it was a right decision to look through those increases in energy prices to underlying inflation, which was very, very tepid, and in fact, not even close to the Fed's 2% target. On the flip side, what we've seen is multiple shocks, and what we know is in the wake of the pandemic, multiple shocks combined with persistent, almost endemic instead of episodic uncertainty. It is a constant state of uncertainty regarding the global economy, geopolitical tensions, all of the above. That produces more persistent bouts of inflation than just one-time shock. So the fact that we have repeated shocks is important as well. Everything from the reopening following the pandemic to the conflict in the Middle East to tariffs, and yet another round of tariffs that are going to hit in August of this year as the administration moves to restore those tariffs, the revenues from the tariffs that were ruled illegal back in February. So all of that gives us this extra pressure on inflation, and then you have on top of it that the sequencing of AI is pushing up inflation today before it can possibly deliver on the productivity gains needed to lower those costs.
Diane, a lot of what we're talking about is goods inflation, but as you mentioned, services inflation is proving sticky also. Where are the stickiest parts? And how would the Fed, talk to us about this so-called transmission mechanism? If the Fed raises rates, how would it help attack those particular sources of inflation?
One of the biggest parts of inflation, of course, is healthcare costs. And healthcare costs, we've got aging demographics helping to push those up. Also, service sector inflation is being buoyed by affluent households wanting to pay up to go to the front of the plane, to go to luxury hotels, and to continue traveling this summer. We're going to see an extra bump from the World Cup games as well in host cities. We know the bookings are already up. And we know things like amusement and anything that gets a live entertainment, whether it's in-person sporting events or
Google on the move. Google.
by extraordinary amounts. So the service sector inflation got an extra boost from things like jet fuel being high that added to it from the energy. That will dissipate. But the fact that we've got this inequality out there, we have affluent households willing to pay up, that is a problem. And the Fed has to deal with that. And the only way they can is through a very blunt instrument, and that is higher interest rates. Now, that could take some of the steam off the wealth effects that are propelling those prices higher It's a hard way to do it, but it is nonetheless important because low and middle income households
BlackBerry, nice pop.
hardest by high inflation. Much like
Nokia.
have compounded over time, inflation has compounded over the last 5 years to make the level of prices too high and out of reach for too many.
Earlier this week, Bruce's Lockwood Apollo posited that lower oil prices will actually be inflationary because people will then spend more money. If they're not spending it on gasoline, there will be that spending impulse elsewhere. What do you think of that view? Because obviously it seems a little counterintuitive.
Actually, what we did see during this month was just the opposite of that, so it supports that view, and that is that higher prices at the pump curb spending in terms of people filling up their gas and curb spending at the grocery store. And now that those prices are going to be coming down, they come down slower than they go up. There's a lot of reasons for that. They go up like a rocket, they come down like a feather, and there's a lot of consumers that are upset about that. Still, once we do get lower prices, it will free up income for discretionary spending that has been wiped out among low and middle income households. So again, coming back in areas that have been hit in terms of demand destruction, now reversing that at a time when you're still getting that extra spending from affluent households, that is an equation where the Fed has little choice but to raise rates. In fact, the economy looks like it's accelerating in the second quarter of this year despite higher prices at the pump.
Well, we shall see.
Wow, Bitcoin below 60,000.
Fantastic to see. Thank you so much for joining us.
Here.
All right, next we're talking about higher prices. We're going to get more details on those Apple price increases next.
Okay, IWM looking for a rip here.
Can you guys hear me? Uh-oh. I hope I'm not frozen or anything.
Casper Solar Support keeps you out. Casper.
Guess what? Experience Boost is even better because now my monthly insurance payments, my streaming payments,
Watching IWM, looking forward to pop through the high of the day.
more ways to build credit.
What time is it? 10:40. Starting to get a little stretched in time. Wells Fargo. Wells Fargo got some profits there. Probably should take some off, right? Now I got September 90 call. Look at the banks. Goldman Sachs finally recovering. Morgan Stanley. MSGS, Wells Fargo, Citi, BAC recovering. Okay, rotation into lots of different sectors, as we can see. Okay, let's go look at the heat map. Okay, so we can see what's actually moving. The big tech, obviously, some of these big tech names are down more than 2%, like Apple down almost 5%. But healthcare looks okay. Utilities, real estate, materials, energy, industrials, financials, all of these look good. Look at all the banks down here.
It's always kind of a rumor. And Apple has kind of engineered certain ways of increasing prices without so much raising prices. Whereas they'll say something.
Typically, the price. So what's unusual here is, in my memory at least, correct me if I'm wrong, probably a lot more close than I do. Don't the price increases usually come with a product cycle, right?
Yes, yeah, yes.
So it's a little bit unusual here that it's stuff that's
Banks look good.
It's not the newest generation. I mean, it is the newest generation stuff. It's not. It's not the introduction.
Yeah, yeah. That's usually how they do it. And the way they can couch it kind of with the iPhone in particular is they'll say, yeah, we're giving you more memory. So it's offset. So
Real estate, utilities, materials, energy. Lots of rotation.
Right, and I think it's those lower tier offerings that I think are going to be pressured the most. Obviously, we're seeing that with the Neo, the Air. It's all the entry level ones are getting hit right out of the gate, and it's something that we're seeing across not just Apple but the broader ecosystem when it comes to laptops, tablets, smartphones. I mentioned this a lot because it's close to home. Is video game consoles. Those are is the original Nintendo Switch, which came out almost 10 years ago. It is now 9 years old. Is $50 more expensive than it was 9 years ago. It came out in 2017, so it's gone up. Right. So you look at something that you had in your whatever your TV entertainment center.
Yeah.
It's now worth. It's crazy to me.
Yeah, that is crazy.
And I think we're gonna continue to see this. A lot of analysts have warned that it's going to be disruptive to demand. If you look at
that's how the Apple shares are behaving today. Dan Ives, though, out in a note today said that he says we believe the company is in a strong position to increase prices without sacrificing hardware performance and risking increasing customer churn because the company's focus on the high-end consumer. But we'll see.
Right, and I think that's one of the things is you don't want to see them lower the amount of storage that they have to offer or RAM, memory that they have to offer. All that's going to do is annoy people because then you're going to have a system that doesn't run the way you want it to. It's going to be lagging. You just spent this money on this, and you get it out of the box. And that's kind of what happened with the Windows PC makers. You get out of the box and it's going to fly, and then a month later, it sucks. Like,
well, people have high standards for their Apple products.
Yes,
So they
yes.
deliver.
Yeah.
Thanks so much, Tim. Appreciate it. Coming up, how the protein craze is reshaping the packaged food industry. We'll be right back.
Everyday life is busy. With Electric XP4, everyday life is easier than ever. Smooth suspension, a comfortable seat, and room for whatever you're bringing along. Need to store it? Just fold, pack, and go. Simple to ride, easy to store. So every day is all fun and no fuss. Electric is America's favorite e-bike. Electric XP4. Every day just got easier.
Wednesday with split pay is just a Tuesday. Life's in sync. I go with the flow. Groceries, coffee, flowers after work. Didn't even check my bank. Split your rent. Download Split Pay today.
If you ever come face to face with a grizzly bear, the only real chance you have is to stay completely relaxed. And what better way to stay relaxed than Candy Crush Sonic? Stay calm. Download Candy Crush Sonic today.
American dietary habits have been shifting. 1 out of 8 Americans are now taking a GLP-1, and the Department of Health and Human Services has doubled the recommended daily serving of protein. They did that earlier this year. So look at what this means for the packaged goods industry, packaged food industry specifically. John Guido is joining us now, Hormel Foods president, and our Thomas is here as well. Talks all things food. John, thank you so much for coming in. So, how has this affected the company? Have you had to ramp up on certain products? Have you had to innovate new products in order to meet this big demand that we're seeing?
Yeah, thank you for having me. Certainly, the protein demand is in a bit of what I call a frenzy right now in terms of consumers looking for protein. But the trend around protein is a long-term trend in the food industry. If you go back over 25 years, there's been lots of ups and downs with dietary trends in food. Protein has been an enduring one, and it really comes back to consumers' interest in understanding what does protein do for me. It was in the days of kind of the gym moment for protein is about strength and muscle building. But now consumers associate protein with satiety, weight management, healthy aging, bone health. So that vast array of benefits that consumers associate with protein means we have a portfolio that we have a lot of opportunity to connect with consumers. So we do obviously a lot of meat at Hormel. We do poultry, we do pork, we do beef, we do nuts and nut butter. So all of those different proteins in our portfolio are opportunities to meet those consumer needs. And frankly, consumers want protein at all times of day. So they're looking for it in the morning. They're looking for it in their meals at dinner and lunch. But also snacking is a very explosive area for protein, where consumers are looking for more substance in their snacks and more protein.
John, I was talking to someone yesterday actually, and they were talking about perhaps the 3 meals.
All right, IWM trying to break out again.
Is that what you're hearing in the industry too?
Yeah, I mean, the way consumers would look at it is they're looking for more micro meals or mini meals throughout the day. They're certainly migrating in a direction where it's less sitting down, less big meals, and they want to eat more, I'll say, fuel stops during the day.
I mean, is part of that driven by GLP-1 because you can't eat as much at once?
So the GLP-1 community for sure is a growing community. Adoption rates are rising, and protein is a critical part of the diet for the GLP-1 community. But more broadly than that, just the way people want to snack is they're looking for fuel during the day. What's going to give me the energy? What's going to hold me over? What's going to satisfy me so I feel good to get to the next fuel stop? And if you look at a lot of the snacks that have traditionally been built in this category, they were treats. They were things like cookies and candy and chips. Fuel-oriented snacks are more like substances. So think nuts and nut butters, meats and cheeses. These are the types of snacks people need to actually get the energy from the snack.
Right. And when you think about the acquisition of Planters, I can't believe now it's been 5 years since Hormel got Planters in its portfolio. Are you looking at perhaps other nuts, other portfolios, other brands out there?
Yeah, certainly if you look at the arc of the company, I mean, we're a pork company that's expanded a lot from turkey, chicken, beef, and now more recently in the past decade through Skippy and Planters. We've expanded in nuts and nut butter, so more plant-based protein. So certainly we continue to look at the consumer landscape broadly to see what do consumers want, what types of proteins they want. That is a very, very ripe growth area for us in terms of nuts and nut butters. If you talk about snacks that are portable, that can make you feel good, give you the energy you want, that are tasty, nuts and nut butters are a great place to.
All right, I'm looking at pistachio.
I mean, yeah, I mean, nothing beats just like wrapping a handful of nuts. Are you guys also doing sort of like, I mean, I feel like, I'll be honest, don't love it for myself. They're injecting protein into everything now, even things that have nothing to do with animal protein, etc. Or are you guys, innovating in terms of some of the snackable options that you're offering?
Sure. So we like to say we do protein the old-fashioned way through the food. It's inherent in the foods we sell. That's pretty much what we do in protein.
What we are doing is creating more snackable formats, number one, so we want to make sure we have packs available. So if you think about one of our platforms for home out gatherings is meat and cheese combinations put together in trays. So we've done them historically in larger sizes for entertainment. We're making those smaller snackable formats, and we're bringing them to channels across the
All right, so IWM still pushing.
which is a big growing area in the marketplace where consumers are buying snacks during the day.
Unattended retail areas is like
Breaking through that 100 level.
Automated machine in your office where you could
where you're grabbing a charcuterie board.
grabbing a charcuterie for one. So we have another brand called Columbus, which is an elevated charcuterie brand. And again, we're bringing that down to snack packs for one, so you can actually get that elevated charcuterie experience during the day.
Think about the price of beef, of pork.
Intel pushing a bit higher. Intel.
Averaging near 5-year high. How is it impacting home health?
Yeah, for sure. We have seen elevated protein markets broadly, including beef, which continues to be very, very high. We have had to take multiple rounds of pricing to address that, focused on areas like beef and pork, some of the nut types where we've seen commodity inflation.
What's SpaceX doing? SpaceX still
Very difficult right now for the consumer. The consumer is very strained with all of it.
below 155. Yeah, still below 155. That needs to get back up there. Micron fading off the high. Micron. IWM still looking very strong.
Performance as a company needs to be consistent growth from the top and bottom line. If you look at our most recent quarter, we closed our second fiscal quarter. We delivered our sixth consecutive quarter of top line net sales growth. So we felt very good about that. That speaks to the resonance and resilience of our portfolio, the demand for protein and the value that protein gives. But we need to consistently translate that to bottom line growth. In the most recent quarter, we delivered margin expansion and profit growth across all three of our operating segments: retail, food service, and international. And that's what we need to continue to do.
John, really quickly, as fuel costs come down, how is that translating into your moving costs?
Yeah, so when you think about fuel, we certainly see the direct cost of transportation, so it's good in terms of our outlook for what it's going to cost us to move our goods around. But it's also good news from the consumer standpoint. Certainly, sentiment has remained very low. Elevated gas prices is contributing to that with the consumer. So seeing some easing there will help that consumer sentiment, I believe, as well.
So not just on the cost line, but also on the food.
Excellent.
John, thanks so much for coming in.
Thank you. My pleasure. Thank you very much.
Listen, look, thanks so much. And that is it for Market Catalyst. I'm Jenny Hyman. Thank you for watching. For Young Journalists.
Intel's having a difficulty at this 131 level. Intel. Intel. Google hanging out at the highs. Looking for Google to get back into yesterday's range, hopefully. Still fading along that lower Bollinger Band, Google. S&P rejected at 7,400 again. S&P pulling back in. Bitcoin made it down below 60,000 this morning. Okay, running down the list on the S&P 500. SanDisk, number 1. Micron, number 2. GLW, Corning, number 4. Flex, 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 number 5. Applied Materials, Teradyne, XYL, Caterpillar, Hub, and Western Digital in the top of the list. NASDAQ 100, SanDisk, Micron, Applied Materials, Western Digital, PACCAR, KLAC, Qualcomm, Insmed, Seagate, and Honeywell, rounding out the top 10. A lot of rotation in the markets. And not, looking pretty strong, actually. Rotation. Showing up in the S&P Equal Weight Index. Just made a new all-time high. S&P Equal Weight just made a new all-time high. Okay, RSP Equal Weight made a new all-time high. 213.47. The high was 213.79. So it's definitely some rotation out of big tech into materials, industrials, financials, travel and leisure, consumer discretionary. Let's see what consumer discretionary looks like. XLY. Got a little bounce. XRT was active yesterday. Retail breaking higher. A little rejection this morning. But industrial's looking good. Industrial's looking good. Okay, the industrial's definitely looking good here. Okay, Caterpillar. Wow, Caterpillar, beautiful. John Deere. 3M. Danaher. Home Depot, discretionary. Builder related. Nail, NAIL. That's one Dr. Frank used to like to trade all the time. Anybody hear from Dr. Frank? Dr. Frank, if you're out there, just let us know you're okay. Haven't heard from you in a while. Nail. XHB. Breaking out. Toll Brothers. All these builders looking really good. BZH. KBH. KB Homes, Lennar, LGIH. I mean, there's so many of these. The whole group is moving. Whenever the whole group is moving, you have a pretty good shot. Okay. Nokia. All right, nice recovery so far. I agree. Oh, you listening? Okay, cool, Frank. All right. Oh, good. Excellent. Excellent. That's good to hear. That's good to hear. Yeah, good to see you, Doc. Good to see you. I can't tell you. My mom's 94 now, and I keep talking to her. I talk to her every day. She's like, wow, she's still very articulate. She doesn't want to go in a nursing home. So why don't you come live with us? She doesn't want to leave her. Looks like the wife and the mother-in-law are fighting about something. She just brought her back home, so be careful. Be careful, Vinny. step around that minefield. IWM looking good, making new all-time highs. Listen, if you're trading IWM, you got to pay attention to the 10-year yield. While it's not the only thing, it is a big deal. All right, so down here below 4.5%, certainly below 4.4%, testing 4.35, 4.36. That's 100 basis points. That's 100 basis points in 2 trading days. So that's a lot. That is a lot. So that goes right to the bottom line on IWM. All right, these small cap companies have a hard time with financing their debt. So okay, watching IWM. All right, so notice the 10 years turning up a little bit. I don't see it getting back above the 50-day anytime soon, but IWM is backing off, back below 300 again. Okay, watching Intel. Okay, so big cap tech, a lot of profit taking. So the way I would figure it is that the big tech stocks, some more profit taking after Micron's earnings. That money's flowing into other areas. So you want to be in the other areas or cash. The other areas being home improvement, the banks, Goldman Sachs, Morgan Stanley, Wells Fargo up today. Wells Fargo. What's SoFi doing? SoFi disappointed Jeff yesterday. It had made an attempt to break out. SoFi still just grinding along. 921 is up above the 50-day now. 50-day is gradually turning the corner. Let's see what MasterCard looks like. Visa. Okay, Visa doing a little bit better. What is it? SYF? No, that's Stiefel, right? No, Synchrony Financial, SYF. What is Capital One Finance? Capital One, breaking back higher. What is, well, the bank's doing good. Banks, insurance, TRB, breaking out. Mr. Flood talking about the insurance companies yesterday. Humana, the healthcare companies bouncing. I thought that we might see some consolidation. These are turning back up. Okay. Microsoft looking very ugly. Microsoft. Very ugly. Okay, Cerebras made new lows. Cerebras made new lows. Looking for a base down here, hopefully. Turning back up. I mean, the chips are a lot faster than NVIDIA's. So at some point, you would think these are going to catch fire. The point is, when is that point, right? Do we move lower first? Do we make it $100 stock before we move back up? I mean, do we do what Netflix did? Netflix disappointing everybody, including myself. I thought sure this would bounce near 95. This is still sucking money in until this moves back above the 9 to 21 day, and those at least turn back up, show a base. I wouldn't touch Netflix. Same thing with Microsoft. Okay, I looked at Microsoft yesterday. Looked like it might do something. We didn't bite. We just let it go, and it just kept going. And here we are at the lows again. So we got these lows over here at 355. Is that going to be it? What is Microsoft going to do? Are they going to do something? Are they going to create some sort of software model that plays on coding like Claude? Do they have something like that? I don't know. But they definitely need to do something. Because if I can code a dashboard, if I can produce this, and I know nothing about coding, right? It's still not doing what I want it to do, but if I can get this to work using Claude, okay, we're turning back down now. If I can get that to work, then just about anybody can code with Claude. Okay, so here we go. We're pushing back down now. S&P. Intel pulling back in. Okay, a lot of chop, chop. Industrials, healthcare, materials, financials, energy, utilities, a lot of rotation. A lot of rotation. Money Magic also posting in the trading room. Okay, Home Depot.
Download now.
HD. Okay. What's IWM doing? IWM pulling back a bit. Okay, keeps testing that 300 level, new all-time highs. We'll probably just keep grinding along. IWM. It's trending. 10-year has been trending lower. That's going to help with the rate hike expectations. No rate hike at this point. So just keeping things the way it is, the markets can continue to grind along. We're sitting on top of the 50-day. S&P sitting on top of the 50-day. I do have those hedges. Do I want to add to these or not? Okay, Intel rolling over now. Intel's rolling over. Okay, does the market trap everybody today, bulls and bears alike? You didn't take profits this morning. Let's see. Oracle's down another 4%. Oracle is dead money right now. Oracle back down to the April lows. Triple bottom. 11.15. All right, true to form running into 10.30, 10.45. You should be taking profits off. That's something S&B Capital preaches constantly. S&B Capital, one of the biggest prop firms. I think it is the biggest prop firm in New York City. S&B Capital. One of the things they teach is you want, especially new positions, you want to be scaling out into 10:30, 11 o'clock. Wait for new positions later in the day. So true to form, we are fading a bit. Okay, let's see what hedge flows look like. Hedge flows. All right, they were sideways, still sideways, dipping a little bit right now. In between support and resistance levels, 73.25 and 74.50. Going to suck a lot of people in to the put side if we keep showing tests of the 50-day moving average. So we're below the 50-day EMA, right? I believe we're below the 50-day EMA, right? S&P 500. Let me see. Do I have it set to the 50 EMA or the 50 SMA? 50 simple. All right, 50 EMA. 50 EMA. We're actually sitting on top of the 50 EMA. We tapped it, turning it back up again. 50 EMA, as you can see, this is the S&P 50 EMA, exponential moving average. If I put the SMA on, 50 SMA, what's going on here? 50. SMA, simple moving average. You can see that we're below it right now. Just push back above it. No, we're right below it now. Okay. So EMA, 50 EMA is right below. We tapped it a couple of times. All right. So the big thing I would focus on is, all right, so the obvious problem is big cap tech. Money's coming out of big cap tech. So if you got profits in some of these, you probably want to reduce your risk. This is the equal weight, S&P equal weight. You can see it made a new all-time high. It's coming back in, but we're not rolling over. Let's look at the New York Stock Exchange, NYSE. Okay, does that look? I mean, we've seen where this is pushed up against the highs, and the next day it could be a big drop, right? We tested the 21-day. We're bouncing back above. RSI is rising. Rotation is very evident. If you look at financials, big rotation, industrials. Okay. What's energy doing? Energy bouncing, materials bouncing, healthcare bouncing and breaking out, utilities breaking higher, consumer staples bounce. So there's a lot of sectors that are rotating. The money's rotating out of these big cap tech names, and pretty obvious that they're having impact on the equal weight index. We made a new all-time high. IWM made a new all-time high. It's off the best levels, but it is grinding along. IWM. The Qs, a little worse for wear. The Qs, not as bad as the S&P though. So that's pretty interesting. Okay. Home Depot, Toll Brothers. All of these look good. All these look good. Just buy the dips, right? So let's say you're thinking about buying Pulte Homes. It's bullish. Stochastics is rising. You can see that right there. Stochastics rising. MACD's got bullish momentum. You got volume. RSI rising. So I'm thinking about buying Pulte, Vinny. I'm just speculating. So what you're looking for is the B pivot. All right. If you didn't get the morning run up into 10:30, 10 o'clock, you're waiting for this. You're waiting for B and C. Let's see a few names here, like Beezer Homes. Okay. Toll Brothers. Toll Brothers pulling back a bit. Okay. 5 minute. Okay. What's the biggest winner today? Biggest winner. Micron, obviously. Big gap up on Micron. MU. Faded from the highs. There was a big put sale way down here near 700, I think it was. So materials, what's Freeport doing? Freeport McMoran? No, nothing there. What about OKLL? Oklo? No, making new lows. Oklo. Financials are doing good. Okay, Wells Fargo. Not used to seeing Wells Fargo outperform Goldman Sachs off the best levels of the session. Dip buyers. Citigroup. Bank of America making new highs. PNC Bank, they bought a bunch of banks last year. 2 or 3 banks they bought, PNC, to try to compete with some of the other big names. They operate a lot in the Northeast. KRE, the regionals, those are breaking out. Right, so you don't have to buy individual names. You could buy the regionals. Would you buy right here? Probably not, right? Well, no, we just had a pullback here. KRE. So you just had a pullback. This is looking pretty good. Probably keeps going. Money's probably going to keep rotating out of tech into these sectors. So, yeah, this looks pretty good actually for the pullback. Put a stop underneath 74, or you could wait until the evening session. No hurry. Come back around 2 o'clock. Enjoy your summer, right? Go to the pool, do whatever. Go hit some golf balls. Go play tennis, Brando. Does this pull back a little bit more? Maybe get a better entry, but I would definitely be interested in KRE or FAS. Okay, FAS, watching that, dipping at the moment, trying to break above 157. FAS, the Direxion Financial Bull 3 times shares. Look at Travelers Insurance. Look at insurance names; those are all breaking out. Cincinnati Financial, Cigna. Travelers, Cincinnati Finance, Chubb, CB, Chubb. All right, so there you go. I mean, there's so many different names that you could be utilizing. AEP, American Electric Power, breaking out. The utility sector doing well. Edison, EIX. After you've done this a while, a few years, I'm almost 40 years into this. Next year, December next year, will be 40 years of trading and investing. While I'm not always right, far from it, I got a lot of knowledge to share. I keep telling, I want to download my brain into my son, so that he can learn from my mistakes. It's good to make mistakes, but not with money. I'm sorry. A lot of people talk about, well, you blow up accounts and no. You don't have to blow up accounts to learn. Get a mentor, get somebody that's actually doing what you want to do, that does it well, and copy what they're doing. Learn from them. That's why apprenticeships were such a big deal back in the Middle Ages and even into 19th, 20th century. So anyway, kind of getting off philosophical on you. So utilities look good. Check out your favorite utilities. What is it? American Water? Was it American Water? AWK. Okay, breaking higher. Any utilities probably going to do well. Healthcare stocks. Humana, all of these look like they were consolidating. Now they're bouncing. Humana, United Healthcare. What's that? DaVita Healthcare, DVA. That looks okay. What else? Energy stocks. What are the energy stocks doing? CVX at the 200-day. It depends on the energy stock. What's Bloom Energy doing? Bloom Energy back in. That gapped up this morning, fading. I'm expecting buyers to step up and this to start trending at some point. Bloom Energy. In the thick of the AI build out, picks and shovels, the batteries that they produce. Okay, other picks and shovels like Caterpillar produce the generators to run these. I've been hearing people complaining to the municipalities that some of these data centers that are too close to some of these neighborhoods, that they hear a constant whine. I'm thinking that those are those generators that are bugging the crap out of people. So, solar. What's solar doing? FSL. First solar. All right, that back to the 50-day, 200-day. Enphase. SEDG. Okay, those aren't really that interesting right now. They'll probably bounce in the next couple of days. Travel and leisure stocks, the airlines breaking out. I mean, there's so many things that you can trade or invest in right now. You don't have to spend all your time with big tech. All right, let's see what is actually moving. We've got 355 stocks advancing, 55 on the Q, so more than half of the Qs. Half of the IWM, small caps 950 out of 2,000 are advancing. So we're looking for IWM to keep trending. Okay, I'm going to take a couple minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. No worries. The markets are just kind of chopping around right now. Just make sure you have enough time if you're trading options. I would suggest the way I'm doing at least August, September, October options at this point. All right, I want to have time for the stocks to work out. Okay. Home Depot, I have January. I have January options on Home Depot. Wells Fargo, I have August 90s. I think it was August 90s, right? Wells Fargo, September. I got September. So most of my options are out. You'll find that the further out in time you have, they're a little bit more expensive. If expense is a issue, do a spread instead. Do a $10 spread instead of a $5 spread. Less expensive than buying straight calls, closer to the money, but you can participate and have enough time for the trade to work out for you. These stocks are trending. If you look at the weekly, Wells Fargo, okay, back above the 10 EMA weekly. So that's what you want to see. Home Depot, back above the 10 EMA weekly. And you know what happens during this time of year between June and October, hurricane season, home improvement season, planting, doing everything you can around the house. That happens. This is going to keep going. And then it fades after, November. It fades, always fades, Home Depot. So this is the time to be long Home Depot or Lowe's if you're interested. Okay, so I'm going to put this on S&P and let you guys watch this for a few minutes. I'm just going to take a break and I'll be right back. I talk too much anyway, according to Mondo. So I know I'm just being sarcastic, Mondo, so don't take it personal. I'll be right back.
Motivation is a lie. The plan is the truth.
Can't always control the game, but the right gear can give you an edge. Thank you, Grandpa.
try these instead? These feel amazing. Better, huh?
Explore the MD Air crutches and drivemedicalathome.com today.
Yes, no, Panera has a new thing called a salad stuffer. It's amazing. It's like salad stuffed in a soft Italian roll. No, it's like stuffed in the roll. Okay. New salad stuffers, only at Panera.
Well, good afternoon. I'm Kenny Polcari, and this is Trader Talk at Yahoo Finance. And today, I've got two very special guests. We've got Gina Martin Adams, who's the Chief Market Strategist at HB Wealth here in New York City, and Adam Shapiro, who is the Managing Editor of A Invest. A very interesting concept. We're going to talk about that. I'll let Adam tell you a little bit about that so that you get it. But it's going to be a very interesting conversation today. Well, thank you very much for joining me. I do appreciate it. I'm very excited to learn a little bit more about the A Invest, so, and you, as the listeners are as well. So why don't you tell us a little bit, Adam, just about A Invest, and then we'll take it.
A Invest, think of it as two things, and it's very much like Yahoo Finance. I manage the content side, right, where we write articles. I have human beings who are writing articles for retail investors, for day traders. Yeah. In fact, our demo, I can share this. Our demo is mostly men, 25 to 54. We do have women, but it's mostly men. And so we use the content that we write with human, video, podcast, and written articles, as well as large language model written articles, as top of funnel to attract people to the platform. And then you can choose to try some of our AI tools. Amy is our agent. Our AI agent is Amy. And Amy can, you can use Magic Signal. Put in 10 stocks you choose, and then you set the parameters you want to watch. And you tell Amy, this is what I want you to watch for sell, buy, all of these different things. You will get notifications from Magic Signal from Amy, and then you then have to execute. And through the platform, you can link to your brokerage, and you can then execute trades should you choose.
Gina, let's talk HB Wealth.
Yeah, sure. HB Wealth is a fiduciary fee only RIA, headquartered in Atlanta, actually, but with clients all over the country, predominantly in the southeastern and mid-Atlantic United States. I'm the Chief Market Strategist. We work inside the investments team, also sit on the investments committee. So we provide our research and analysis of financial markets to help enable investment decision making, help tool the advisors with conversation talking points and intelligence to share with our clients.
Perfect. I love that because you and I do the same thing. I do an independent RIA as well, smaller than yours, but we design it with the same thing. You know, something help media as you are. Kind of talking about markets. So now that we're talking about markets, let's talk about it.
Yeah.
We just had earnings season is about over. We've got 4 or 5 companies that are going to report this week, which really will wrap it up. It's Marvell, Hewlett Packard, Costco, Dell, and Salesforce. I think they're very significant because those five names kind of represent the whole theme that we're talking about. It's AI infrastructure, AI infrastructure data. So talk to us a little bit about where you both stand on how the earnings season played out, where you think we're overdone, and where you think we're opportunity.
Okay, sure. So earnings season was phenomenal. For lack of a better word, 29% year over year versus expectations of 12%. Just phenomenal. 83, I think, percent of companies beat expectations. So the backward look from earnings season was extraordinary.
Right.
I think the trouble we face now is how do we compare to that going forward? And typically, years in which earnings growth peaks tend to ultimately be actually relatively low price return years because earnings growth is peaking. You can't get much better than that. This is the challenge for companies going forward.
Right.
That said, there still are pockets of sort of extreme earnings growth that are inside the equity market. And now it's just a matter of how much are we paying for that earnings growth and can companies continue to beat expectations at such an extraordinary pace. So we're in this kind of waffly middle ground with respect to the markets where, yeah, things look fantastic. Will they continue to get better, or will we see momentum slow a little bit in the second half of the year as we start to see the impact of higher oil prices, higher interest rates filter through some company fundamentals? So it probably becomes a little bit more of a mixed story into the second half this year, whereas first quarter was unabashedly fantastic growth throughout.
Right. The oil story may in fact change, right? If we get this deal that we're hoping is real, this geopolitical, we may see oil come back down. It may not come back down to 60 initially, right? Because I think there's a lot of disruption as a result, right? All those tankers sitting in the Gulf and all that stuff. But it may take some of the pressure off that. So that's going to be interesting. Part of the argument in the second half of the year.
It'll be really interesting, especially because there's a little bit of a misunderstanding about how oil impacts earnings. Oil and earnings are positive for a little bit. So usually you don't see the downside impact of an escalation in oil prices until oil prices start to ease.
Right.
So you could have the sentiment headwind of high oil prices removed from the market at the same time that you have the earnings headwinds start to emerge on oil. That creates a more volatile outlook in the very short term, just depending upon when you do ultimately see oil prices resolve. Frankly, stable oil prices are the best environment for equity.
Yeah, not at $100.
Not at $100. And so if we can get back to 80, even lower than 80, and we can stabilize them, it's a fantastic environment. But for now, it is still a risk, and it's a somewhat underappreciated risk because it's been overwhelmed by extraordinary movements in the short run.
Well, I haven't asked Andy, so I will tell you what the guests we've had on our platform, and I'm not going to argue with an economist and someone who actually had skin in the game as portfolio managers, not portfolio managers, but as strategists. One thing that people don't talk about is the fact we're in a midterm election. Yeah. And that the second quarter of a midterm election is always the most volatile. Right. And you can expect things to, right. And then we shoot up after. Right. So, and I've had different guests on who on our platform who've said that very thing. The one thing when you talk about earnings and where we're going is the question I like to ask the team when we're having discussions is how are we going to make money now? Right. And you have juggernauts like NVIDIA, okay, they're going to make money. But then Salesforce, when they report earnings after the bell, are they able to monetize what they've been doing? Right. Can they make money off of this? And that's the question. We have and profit is going to become profitable at this point, right? So look at IPO, right. But OpenAI, what's going to happen there? And the question that our investors are asking is, where do I make money? Because the herd is following the Mag 7. The Mag 7 might have some difficulty. Google doesn't even tell you exactly what they're on. So you have to look where the herd is on. Agreed. And so where is the herd not looking? Does Amy have an idea? Oh, yeah. Well, Amy has an idea. Absolutely. You should go on there and you can ask Amy. Phrase the question very simply. Right. Everybody is facing the Mag 7 with artificial intelligence. Where should I look if I don't want to go and see how Amy responds? I would bet you that Amy says, look at infrastructure build-out, at utilities, and Dr. Copper, who's got to be not asked Amy about Copper right now, but with the infrastructure build-out, with AI, and with data centers. The only thing that can throw a wrench into this is the NIMBY factor.
Okay, a few things are starting to bounce.
It feels like everyone's trading the markets these days, and maybe the thought is that should stay exactly where it is. Tradify offers something different, a low-risk way to actually trade the markets without sacrificing what you've worked so hard.
Okay, Cerebras coming off the low, CBRS coming off the low. Still looks like it's building a base down here, perhaps.
She consults with you to find out exactly what you need and want.
Netflix turning back up. Netflix. Okay, IWM. Best off the best levels of the session, but still it's trending. Nothing to be too concerned about. We've got the equal weight index making new all-time highs along with IWM. So that's telling you there's rotation with the New York Fangs down. That's telling you rotation is taking hold. And should be expected to continue. Rotation into travel and leisure, the banks, insurance, materials, healthcare, utilities. We said travel and leisure, the banks. So a lot of these and the industrial, especially the industrials, that's showing a lot of strength today. XLI breaking to the upside, a little profit taking at the highs, but that's okay. That's what we want. We want that to break to the highs and give you an opportunity for a second entry or a first entry on a dip. It's bullish. RSI is rising. Okay. IWM trending. So IWM, you got to wait for the dips, the 1 minute dips, like this morning. Trade these back up to the highs. RSI oversold, looking for a higher low now. Intel. Pelosi's are in Intel. That was pretty manufactured. That drop there. It looks like a sell program or something. Sell program on Intel.
Let's step back from this. Look at what other sectors though are presenting opportunity. I think there's opportunity in healthcare. I think there's opportunity in financial. I think there's opportunity in basic materials. Right? I think healthcare is way underperforming. And so I think if you're looking to add new money as a long-term investor, not a day trade, right? Because I think your markets are different, right? We're both long-term investors and you're part of your market of day trade. So you naturally want to be in that space. But you know, you and I, as you're building portfolios, you're talking to long-term investors that are building generational wealth. They're going to want to look at some of the sectors that are underperforming, not chase the names that are exciting for you, but may be too richly valued for us.
Right. And I think when we think about the landscape, we think in terms of geographies, sectors, and factors. And really where we're seeing opportunities right now are in geographies and factors, even more so than in sectors. And I'll walk you through why. If you look at how the markets progressed over the course of this sort of ceasefire era, right? That major low that we had at the end of March, it's difficult to characterize. We had a major low in which we bounced back extraordinarily over that subsequent 2-month-ish period. Almost that entire bounce back was growth stock. It was very specifically growth companies. Most profoundly, semiconductors were the biggest driver of optimism. So you had a 50% rally in semiconductors, which drove 40% of the S&P 500 rally over that time. Growth stocks got extremely overbought. That leaves all other components of the market somewhat undervalued and underappreciated. In particular, quality stocks. If you look at quality very seriously, quality and value is one of the best components of the portfolio. Quality stocks historically have just hammered growth over the long term. They perform a lot better on the downside as downside risk towards.
Define quality. Are you talking value?
We're talking high ROE, high ROIC. I would say are really based on valuation metrics. So low price to sales, low price to books, low price to earnings companies are also relatively cheap and did not participate in the rally. Value did not have nearly the historical track record that quality does. So we want to pick our spots relatively carefully there. But quality, frankly, it has growth-like characteristics, but also performs much better over the longer term and did not really participate in that rally. That leaves some opportunities on the table.
Right.
Also, from a geographic perspective, emerging markets have double the performance of U.S. markets this year. They also command a valuation ratio of only 12 times forward earnings, whereas U.S. stocks are trading at 21 times forward earnings on a market capitalized basis.
Right.
So there's a tremendous opportunity still there to diversify portfolios geographically and still participate in the upside, presuming that we're still in this longer-term bull market with some give and take.
Which I think we are. I mean, tell me where you think we are in this bull market. Do you think it's got length to run? I think it's very strong. I mean, so I'll tell you who I follow, just because I consider myself a Fortune Swap over to Paulo. I listen to Forsman, and not because they own Yahoo. Right. I've known him for years. Right. And he just put out a note the other day. Again, this works. You can get it for free. That the economy is much stronger than people suspect. So when I hear the concerns about the inflationary pressures from but we haven't, for some reason, we haven't broken that for an extended period. The $100 a barrel today we're trading around $92 a barrel. But the other person I follow is not very well known, but this guy Mike Dixon over at Verizon, and he's been talking about the S&P 600. He's talking about small caps and how we talk about S&P 500 is up. I think it's I sent some notes over to you, but 52 weeks it's up maybe 27%, whereas the small caps are up 29%. My question, and you would know better than I would, have we missed that rally? Because I think a lot of people were asleep when this was happening. Yeah, well, I think people have been talking about the SMID, small mid caps, for a while coming into this year. That was a sector that a lot of people were starting to focus on based on what they thought the economy was going to do, what they thought rates were going to do. In fact, a whole other conversation because the rate conversation changed from 2 and 3 cuts at the beginning of the year to potentially a rate hike. Not even holding steady, but a rate hike. Which is not sure is really anymore. But I think that put it out there to kind of make the rate.
Beginning to see beginning to see a little bit of short covering now. Stock's starting to turn back up. Okay, Amazon, nice bounce. Google. Okay, keep an eye on the S&P 500. Oops. Been on mute all this time, just talking to myself. All right, IWM a little bit lower. So there's a lot of volatility today. Hedge flows. We're right in the center of this. All right, starting to build more. I don't know if you noticed. Starting to build more purple in this area. Above and below, we're right in this pocket. So we probably got to just ping pong around these areas. Back and forth. We got that level overhead, 7,500, 7,450, and below 7,300. All right. Not much to do today. We're just watching markets consolidate, trying to figure out what they're going to do next after Micron earnings.
They used to have a policy, and I covered the Fed a billion years ago. And do they still do this? There's a keeper, I think it's 2008, when they did this, where they prefer to let sell. They don't want it to pressure out. They want it to be a natural red. Are we in that kind of situation now? Because that's bad news. Yeah. If it means they want.
Well, it's very interesting because Kevin Marsh would argue that the Fed's sort of injection of quantitative easing into the economy via the balance sheet has created a lot of bubble while rate policy targets sort of the American economy more directly. And so he wants to lean out of that to a degree, which maybe pushes back a little bit against that paper that says that they want to let the bubbles deflate on their own. And as the bubbles deflate on their own, if he's going to actually implement a more restrictive balance sheet policy or get the Fed out of balance sheet as a tool for monetary policy making, then that may help deflate the inflation. I don't think Bush does. I don't think so. I think we do have a problem with elevated debt, putting it on GDP. We do have the fiscal spending issue that he wants to get out of the game of supporting. Will he be able to do that? I'm not sure. That's going to be a really tricky conversation.
They all have said it. Every time they go before Congress, they say spending has got to come under control. But yeah, I'm not going to. Don't talk about it. It's going to be as he does institute the balance sheet reduction. What happens to the U.S. dollar and to the fact that our government continues to spend? Are we at 40 trillion yet? We're not hit 40 trillion in the total debt for the United States. We're over 100% of GDP, and it's what happens to the consumer who wants to go there? What happens to the consumer who wants to buy a car? Right. When you're now competing against them. By the way, you car right here. Right to buy a car? Yes. No. It's got 75,000, not just a big one. Yeah. It's crazy. Anyway, let's think about it just on the second half of the year. You brought it up with midterm elections. Let's start with in terms of what investors could expect. Okay, so I am an optimist. I've always been an optimist. I think that we're going to see a decline in the S&P 500, and then after the election, I think you're going to see a shoot up. I think that the Iran war will get resolved. It will not get resolved well, and they control the Strait of Hormuz and start charging, but the flow of oil, flow of fertilizers will resume its output. So I think the fact that our economy is still in many ways the envy of the world will propel us higher.
I would agree. Bull market's still intact, probably a little ahead of our skis, in particular with some of these growth stocks in the short run, but there are still the equal weight index is not overheated. It's sitting at valuation levels that we had pre-crisis. So there are opportunities in the equity market, which is something responsible a little more carefully after the rip-roaring rally that we had in a select segment of the market. Unfortunately, that segment is also representative of risk tolerance historically in semiconductors, so any pullback in that could be painful in the short run, but I would suspect it's still in the longer term.
I agree. I do think the second half of the year is going to be fine. I think we're going to run into some summertime anxiousness around the midterm election. I just think the war, the conflict is going to be resolved. It's curious. I don't think they're going to remain until we're finished. If that's going to happen after the election, and they're not going to. So the problem, if that doesn't happen, the problem is everyone else can now say, well, we're going to control this one. Agree. That's why I don't think we will do that happen. In any event, listen, we've run out of time. I love this conversation. I'd like you to come back maybe 4 or 5 months. go back over the conversation and see where we are,
Where we did.
what we thought, how we did in any event. I'm Kenny Polcari, and this is Trading Talk, and we'll see you.
Following content is not intended to be financial advice and should not be used as a substitute for professional financial services.
Trainer, get ready to celebrate a true milestone. Pokemon Go Fest 2026 Global is free. That means special research, additional bonuses, and an increased chance of becoming those shiny Pokemon are available to all trainers at no cost. Special research, including an encounter with Sarah Orr, Mega Mewtwo X, and Mega Mewtwo Live will make their global debut during Pokemon Go Fest 2026 Global. It will be our biggest celebration.
What if you could print every to life? Thank you, Rapunzel, at thisprint.com.
How big's the crowd? Over 20,000. Same as the levels in Candy Crush. And it's free to play. No Wi-Fi needed. You know what, Dan? That does sound like a deal. Download it, Mike.
Bitcoin has officially been declared dead for almost the 500th time in history today. I'm going to tell you exactly what happens almost every time Bitcoin is declared dead. Meanwhile, Binance is struggling in the European Union, and more. We've got lots to talk about. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I am your host, Scott Melker, also known as the Wolf of All Streets. You can follow me on the socials and all the places you see below, which is just one place, xx.com. Now, we've got 15 minutes to discuss what is going on with the markets, and today is one of those days where if you want to discuss what's going on with the markets, you're going to be wrong an hour late. So, obviously, overnight, we had a number of articles about Bitcoin reaching its lowest point since 2024. Of course, that was by about $50 or $60. That's not what the details impact our hyperbolic fear levels. Obviously, then, as preparing the show, we saw that the PCE print came in. Core inflation was running a bit hot, and all markets dumped. So what's happening in the immediate moment with price is irrelevant. We just know that we're seeing a lot of volatility for a lot of reasons. Now, as I said, this was kind of the first story. PCE report, Fed's preferred inflation measure, its three-year high, keeping top of possible rate 4.1%, both up from April, both higher on the year. Now you have the market pricing roughly a 50% chance of September rate hikes. Not cuts. I remember when our stock bucket categories was supposed to come in and do Trump's bidding and cut the markets. We don't know what will happen. Our pricing and hikes because inflation is coming in so hot. And we know every time something like this happens, especially when it's already on the back of a lot of liquidations, we see massive people being flushed from crypto. Over $1 billion in liquidations in just a matter of hours. Of course. That said, you can take a look at our favored index and what's happening with Bitcoin, and you see this. Your greatest get. Minus 14. That's the actual index right there. You can see it. The needle's actually bleeding. Now, it's actually at 12 today, if we're being honest, but this is one of those times when we're seeing, Bitcoin selling off into massive fear, bouncing around right at the range lows of where it's been all month anyways, and people are freaking out. I'm going to tell you a lot more about the freaking out when we get to the end of the show. But right now, for the morning, the afternoon, and the evening, we'll probably be talking about inflation and how it affects markets, and I highly predict that we will have forgotten that we talked about that by tomorrow. I put inflation prints very squarely in the noise category if we are bucketing signal and noise. We'll see what Worse does, but he's got a lot of weeks still to do it. That's something that is definitely signal right now. We have finance withdrawals make a bid, but vows to remain in Europe. Now, I've been covering this story for the past few weeks, but right now with finance taking their application out and withdrawing it, we have the biggest exchange on earth speed dating EU regulators 6 days before the deadline. This is not a licensing strategy at this point. It's just a shotgun Vegas way. So they went to Greece, as I told you, over the past weeks because they had it on good information that would be the easiest regulator to get past. Finance, one of the largest exchanges in Europe, the largest exchange in the world, and has been operating basically issue-free in Europe. Now, if you get one license from one regulator, that means that you have basically a licensed passport for all 27 EU, 30 EEA countries. So what finance is saying here is that the timeline was getting tight, so we pulled out. This is not rejected. We decided. So when you know that your girlfriend is about to break up with you, so you dump her first, so you can tell everybody that you dumped her even though you wanted to stay with her? Kind of like that. It's kind of like when you're getting thrown out of a bar, and then you're like, I was leaving anyways. Right? But either way, so now they're being forced to court a number of other regulators to try to get this license. They say that they will remain in Europe, but they're not saying that they will be in Europe as of the July 1st deadline. So they had a pretty definitive response to this. Co-CEO Richard Tang promised that a license will be coming in coming months, right? So certainly not by the July 1st deadline. And interestingly, he even went on to say that funds are safe and accessible, that they're emailing every EU user individually, right? And most compelling in crypto is they had to say, listen, there's a scam warning here. We would never ask you for your password or your 2FA and blah, blah, blah. All the things that are going to make this situation super ripe for scammers, right? But every time we have an exchange shutting down or any question as to its availability, you get scammers stepping in. So be careful out there. Now, this is really an interesting situation because finance worked very hard over the past few years to become compliant, and they have done so, especially since there are issues in the United States. But meanwhile, while they're reporting this, one regulator, OKX and Kraken and Coinbase have all gotten their licenses without much of a headache. And so it just seems like Binance having an unfortunate path here by getting rejected by the Greek regulator. And as I told you, we have it on pretty good information that is because of one Christine Lagarde, the head of the European Central Bank, who just does not want Binance operating. It's going to be interesting to see how this plays out. But if you are not MiCA compliant in the next few days, you will not be operating in Europe by July. Now, we've heard that only 200 companies roughly total out of over 3,000 applying for these licenses are getting them, and only 14 are even able to run a trading platform. So we're going to see a major culling in Europe.
Europe that we had forgotten about was likely to happen because this rule was put in place many years ago. So yeah, there's some, it's an unfortunate situation at the moment for Binance, but I'm highly confident that they will eventually get back. Now there's an interesting tie in that story for the next one, which is a major expose by the Wall Street Journal. I'm sure you know so. How crypto exchange became a major hub for illicit Iranian cash. Iranian entities have moved more than 3.84 billion in transactions through the crypto exchange CoinEx, according to an analysis of public blockchain data. So we'll dig into that story in a moment, but it's interesting to note that the favorite exchange years ago in Iran was Binance, but Binance actually chose to have strict compliance, KYC, and effectively cut off all the sanctioned entities or anywhere that there could be questionable ties to a regime. So as Binance sort of exited, that left a vacuum for another exchange with ties to China that is called CoinEx. So first, Binance becoming compliant and doing all the right things allowed for a bigger hole to form and for actual money laundering to happen through shader exchanges. So this shows you once again something we saw in the United States around FTX and other situations. Often the good actors are punished, and when that void is left, somebody comes in and fills it very easily, so you actually don't stop any of the crime by trying to highly regulate the compliant entities. So that is a very interesting thread, I would say here. But maybe the more interesting part here is that this is not just a story about Iran. It's actually a story about North Korea and Iran and CoinEx, the exchange in between. And the story, by tracking wallets and doing very diligent research to their credit, shows that the Ethereum and coins that were hacked from Bybit by North Korea last year, which was the biggest hack in the history of crypto, $1.5 billion, a lot of that money ended up making its way to Iranian central bank wallets. So the first way a lot of people were reporting it was that somehow, Iran was laundering money for North Korea. That's not really it. It's like these two exchanges, these two countries basically had to avoid sanctions and found out about the same laundromat down the street. And they're both hanging out there, but they don't know each other. Right, so these North Korean funds were basically being laundered, apparently, allegedly, through this exchange. And Iran, in trying to circumvent sanctions, was using the same exchange to get that liquidity, and those coins made their way from one to the other. But there's no direct connection in how that happened from one to the next. But really a fascinating story. Listen, these kind of things will remain a black eye for crypto, but I will tell you this. We've seen the stories about how easy it was for dissent in the U.S. Treasury to freeze and sanction and shut down crypto wallets and funds using a transparent blockchain, which literally the Wall Street Journal themselves were able to do this research and track every one of those coins. That makes life a lot easier for law enforcement than cash, gold, and other assets that have been used for illicit activity in the past. Very easy to freeze and find these illicit transactions. So I have another story right here that I just find interesting. Aave, DeFi protocol, could soar to 3,500 by 2030 on DeFi revival, says Standard Chartered. So you have a 200-year-old bank here, which has tellers and holiday parties, and they just told their clients that the future is a bank with none of those things. This is basically a company cheerfully writing their own obituary and sharing it with the world, right? So, interestingly, Aave was suffering massively from all the DeFi hacks that I have covered previously on the show. Drift hack, Meltdown hack, and we know that gave Aave toxic collateral, and they had an emergency plan, and all those things. Well, the sentiment here is that that's over. DeFi is solid once again and will continue to grow. Now, this is not the first time Standard Chartered has made a hyperbolic price prediction. It's kind of their thing. They made a massive one that I covered on Uniswap just a week or two ago. And it was based on the same ideas. Basically, that we'll see tokenized real-world assets in DeFi pulling a 37x, so why shouldn't price do the same? So this is almost a 50x for Aave price by 2030 that they are predicting. Maybe. I have no idea if it's going to happen, but I think the real signal here is that people are starting to look at DeFi and value it Bitcoin obituary after Bitcoin obituary, and I started retweeting them. Let's just look at a couple of them. Our school president right here, big corporate way. I need all the Bitcoin and crypto people who say it's going to a million and now it's the future to tell me why all Bitcoin have always said it's a scam, going to zero wrong. It seems like it's going to zero. Next one from this guy. Had a lot of engagement. I don't know what he's holding there. I don't know what's happening. I sold all my Bitcoin. It's over. Full video below. No registration. Nick Huber, Bitcoin and crypto can't gain ground in this unbelievable tech and AI run. It's a lost cause. It'll slowly go to zero over the next 10 years. Seriously. They're on the way to lost cause. Of course. Bitcoin was supposed to be the hedge against exactly this money printing, inflation, blah, 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 to go down to the end of this very long run, which isn't even all shown here, and it's dead. There are so many examples on social media right now about how Bitcoin is dead, and there are so many reasons that they're giving for it. So let's talk about what's happened in the past, because before today, and not counting probably even most of these, but on very large accounts, very credible, we have had Bitcoin declared dead, according to a tracker, 472 times since 2018. There were 18 in 2026 already alone, and that doesn't count today. It was 93 obituaries in 2017, and of course, we have eulogists like Buffett, Jamie Dimon, Peter Schiff, a couple of Nobel, the economists who have been saying this. Now, I want to show you the most compelling thing that I found here. Bitcoin has officially been declared dead 472 times. We invested just $100 every time someone said it. We have spent $47,100. Today, you own 1,043 Bitcoin worth more than $60 million. There's a lesson there. But people are declaring Bitcoin dead for almost the 500th time today. It might just be time to take a look. The sentiment is bad. As I showed you before, fear and greed is bleeding and through the floor. Sentiment is atrocious. I still think we're in the bottoming process, and nothing gets me more excited personally to buy Bitcoin, whether right or wrong, than people declaring it dead. Thought I'd come to you today. I will see you back tomorrow for the next episode.
Market's still chopping around. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, June 25th, 12:15. Markets are choppy. AMD is scooting a little bit higher. All right, let's see what AMD is doing here. S&P is pushing a bit higher. AMD coming out of a squeeze. A lot of people got, I don't know, it just seems like people got so fearful this morning. They just sold everything tech-wise. Now they're starting to bounce. NVIDIA's off the low. AMD's off the low.
We'll help you find the right pro for your project, your home, and your needs. With the help of our AI-powered matching, so you can hire with confidence. Thumbtack, we know homes. Hire the right pro today. If you ever come face to face with a grizzly, the only real chance you have is to stay calm and relaxed. And what better way to stay relaxed than Candy Crush Saga? Stay calm. Download Candy Crush Saga today.
Okay, Intel is also bouncing. Intel coming off the low. All right, let's see how far we go with this Intel. All right, Intel looking good, bouncing back. Try to get back above this pivot that we put in. Intel, we put in this pivot back in May, and we broke above it, consolidating at this area. The Pelosi's are in this. A number of big trades have gone off on Intel recently, suggesting that we're going to see more upside. I have the 140, 145 call spread for, let's see, for August. 140, 145. Got 10 of those. Okay, so I like to see this above this pivot and start moving through 140. If it gets through 140, I'll probably either double up, take profits, or do some other sort of bullish positioning in Intel. Not your father's Intel. Definitely been acting different since it bottomed and turned higher. Intel. Finally bottomed back in the early 25 when it was trading at 20 bucks. Can't believe Intel was at 20 bucks. Remember that? Intel back here when it was $25 and we were fretting on every week. We couldn't seem to break out. We went sideways for a whole year. Okay, so not trading anything like that. Okay, so S&P 500, Doji, spinning top, long-legged Doji. It'd be nice to see a hammer here and a follow-through tomorrow. All right, you got to check out rejected. Okay, IWM coming off the low.
Biggest thing to notice is that we hold off-season meetings and we kind of are very honest with each other about what our team is. And this one was a really good off-season chat, and we had Michael sit in on it and give his perspective. And he says, the main thing I'm listening for and looking for week in, week out is that I want to know from all of our leadership, all of our management, all of our drivers, tell me week in, week out, and what you talk about what you could do better. You might think that I did an amazing job and it's their fault. They didn't I can tires enough, whatever I do. Like, so every, the thing about reporting, you got three fingers pointing back to you. And so never point your finger at someone else. Always be the one to self-reflect and figure out what you can do better. Everyone has very
IWM trying to get back above 300. S&P just grinding higher.
really being honest with themselves. If you get the best out of each person and their particular job, you're going to have a successful team.
So on our show we talk about the dirty unicorn, the biggest mistake you've made in your business thus far that we can all learn from.
was we were selling so much, our suppliers couldn't keep up, and so we're like, let's just front load a lot of our inventory, and we ordered like probably 10x the amount that we needed. We were very bullish on projections, and then we had to raise prices because of things like the tariffs and shipping costs went up, and so the volume that we sold was down. We had all of our money tied up in inventory, which caused a lot of constraints for others in areas of the business. We couldn't hire as fast. Wow. We couldn't start marketing as fast. We had to find sort of funding sources. So that was a tough one. And then I would say our product focus, deviated away from our North Star. We did some testing, and we just wanted from the beginning, we're like, let's focus on these smaller ancillary products like our infrared blankets that are only $400. And so we were like, we could probably sling thousands of these. So let's spend a lot of money on a marketing agency and getting these out the door. And then we kind of lost focus on saunas, on the full size saunas, which is really the moneymaker. And so I think that kind of delayed us from hitting goals, and we shift priorities there. But again, all these mistakes we were able to kind of get back on track.
Yeah, I'll add to that. Tyler sparked my memory. So Tyler studied communications in college. I studied mechanical engineering. We both went into sales. Neither of us have any finance or accounting background. So when we first bought that website, Tyler mentioned we didn't know what we were doing. I remember his brother asked us, so did you look at their P&L and balance sheet? And we looked at each other and we were like, what's that?
Oh my goodness.
We've never even heard those words before. And then when we first started struggling, we started seeing volume and making sales, and it was just us two. And my sister-in-law, who is an accountant and controller, said, hey, are you guys managing your QuickBooks okay? Do you need any help? And we're like, what's QuickBooks? So she said, oh, wow, I need to jump in. You guys are making way too much money to be not doing any accounting. And so we kind of just thought we didn't really need to look at the numbers at first. We're like, if we're selling, we're making money, everything's good, right? But you always need to have accounting and bookkeeping in place. And so my sister-in-law was helping us for free for the first year, catching up. We have a lot of different products and channels, and she was doing a lot of work for us. And finally said, hey, your work, this is a full-time job. Let's pay you and actually use your accounting agency for us. So shout out to Geneva. Thank you for all that help before we made you. And then I also will say that, yeah, like Tyler said, we didn't understand how important cash flow is, and looking at the P&L, looking at the balance sheet. So we, like I said, we were like, okay, we're selling these products, so buy as many as we can, we'll be in stock. And we thought, looking at, you spend $1,000 here, $1,000 there, that doesn't really add up to the hundreds of thousands of dollars in POs, right? It's not really, it's negligible, unless it's the last one.
Right. Yeah.
That's when it becomes more valuable.
I've been down to the last 1,000 a few times, and you sweat it, pun intended, right?
Exactly. Trees.
Jack Daniels starts here. From pure cave spring water to the fires that create the sugar-labeled charcoal, where every drop is mellowed till it's smooth.
Okay, New York Fangs are still mixed. S&P futures, there's no pulse right now. Just moving sideways. All right, so you can expect this kind of price action as long as hedge flows stay flat like this. We're right in this pocket of white area here. Purple above means resistance. Purple below means support. Positive gamma.
Search engine and browser, where AI is always private and optional.
Here in the Color Bomb Lab, every Color Bomb is your key to a fresh spring start. Unlock sweet combos, clear more than 20,000 fun levels, and celebrate every big win. No Wi-Fi required. Candy Crush Soccer. Download today and play for free.
Download now.
Chop, chop, chop. No progress. All right, so the sectors that we mentioned earlier are still in play. Looking for dips to buy, BNC pivots. Let's look at a couple of examples. For example, let's see, Home Depot. That's one that we own, Home Depot. Okay, that's off the highs of the day. This is bullish, looking for a follow through. Okay, so looking for an ABCD pattern pivot. So we got a B here, but it needs to show some strength. RSI is oversold now. Does it go? We'll keep an eye on it. You could put an alert on this at 345. If it breaks above 345.50 or so, you'll still have about a $3 move. So that's $150 for every 50 delta call. $150 for every 50 delta call. You just need 3 of those to make up your $500 a day. So we're watching that for a bounce, maybe. Home Depot. What's DoorDash doing? DoorDash. Okay, trying to go green. DoorDash. Doji trending. Caterpillar in the industrials. Caterpillar, the industrial sector doing really well. Microsoft, wow, Microsoft looks terrible, terrible, terrible. Look at Microsoft. As a short, Microsoft most likely will continue. Okay, so we're down here at the 25, February, March 25 low. Got another 10 points to go. Microsoft, 11 points. Wow, that looks pretty ugly. Really needs something good out of Microsoft. I know they've been spending a lot of money CapEx wise on AI data centers, but it isn't being reflected in price actions. Traders don't seem to be interested. All right, let's see what the 10-year yield is doing. 10-year. 10-year.
And so it wasn't easy to get people to see the vision. But I knew if you didn't see the vision, you're probably not going to be a great partner. And if you did see the vision, that's what we want to team because, you know, we're going to do what it takes to make it work. So, learned a lot of lessons about that part of, investments and trying to get something new off the ground.
Why go public now instead of trying to raise more money to stay private?
Because if you continue on the same route, we're gonna have to lead just capability, like lead team owners. It's gonna be the same group of guys getting in on the action, which is fine. I don't mind, but we want to make sure the little guys can get in on it too. Not just the guys with the super deep pockets, but guys who sports fans who want to grow with the league. You understand the league can be around for a long time as we grow. They grow. Giving them a shot.
S&P just chopping around. All right, so we'll see what happens. Oh, it's 12 o'clock. After 12.
This is going to be a dream come true for a lot of people.
I'm looking at it like this. At the rate we're going, all sports teams are going to run by.
This is crazy. It's crazy. I mean, nothing wrong with that, but at the end of the day, we want to give everybody a shot at the growth of this league.
All right, not expecting a whole lot at the moment.
Be with each of their customers' purchases, so they've got. We want to continue that. We want people to feel like they can be a part of it without just buying a ticket or buying merch.
Can't believe how poorly Microsoft is doing. Apple, big drop off today. Apple. Back down to the 200-day moving average. They are stepping lower, literally.
The spotlight today is on a financial. Yeah. So we first talked about this stock here on the show in an hour column at CNBC Pro in December. It's had a good run since then. I pulled the trigger on a long position for myself recently. Also want to disclose this is part of our Porterhouse portfolio for client accounts at Riddles. The reason it's worth talking about today is the backdrop. Can we do the KRE first, guys? This is the regional bank index ETF. It is making a new high. Going back, please, thank you. Making a new high here, and I call this the Holy Trinity setup in Citizens Financial. Here you have the tailwind of the sector being in favor. You've got the chart on your side, and you've got the fundamental story. All three working at once. I live for this. Like, this is my favorite setup in the entire world. So here you have an obvious breakout taking place as we speak. Again, we started talking about this thing earlier, and I think it can continue. And I think the most important point I want to make here, we've made it earlier in the show, we're in an environment right now, to quote my partner Sean, where people are screaming about higher rates, inflation, the consumer is weak, oil prices, geopolitics. Regional banks are your number one read-through to the real economy. And when the entire sector is breaking out, which is the case right now, I can give you 10 other tickers if you don't believe me. What that's telling you is that, by and large, things are going well. These companies have balance sheets filled with HELOCs and auto loans and credit cards and mortgages and loans to small businesses. And
things look pretty good through the prism of the KRE and the charts of its components. I think Citizens is the strongest one. They have a great story about building a wealth management division from scratch that's now growing faster than anything else they do. I would not be surprised to see this take with an 8 handle. 35% earnings growth expected over next year. Stock's trading at a 10 multiple.
Perfect segue to Stephanie. You are. Thank you for being so thoughtful. Stephanie Lane bought more Truist. So you're a believer in this team?
Yeah. And by the way, loan growth data came out this week, and it was great. It was up 8%. It was the best in 3 years, right? And that speaks to the economy and all the things that we've been talking about. Truist trades at 1 times book. Very few companies in the bank space are trading at 1 times book. Yields 4%. It fell 4% last week because they announced a new CEO, who I actually think is very positive. Michael Lyons, he comes from Fiserv, and he also has been, though, a traditional bank executive as well. So I think he's going to bring a balance to the company.
They have capital markets exposure too, right?
Yeah. So I feel like this new CEO is a positive, not a negative. But I think that was just the knee jerk. So I started adding to it last week. I bought it a little bit more this week as well. The ROTCE of this company, profitability of this company, is 12.7% last quarter. It's expected to be 15%, maybe even 16% by 2027. That's called operating leverage. So I expect a solid quarter, and I'll continue to add, especially as the CEO starts and we get more of his vision.
Stay on the loan growth for a second, because there's a dynamic that's happening currently. We have Fifth Third Bank that's at an all-time high. You're seeing lending shift back to the regional banks from private credit. Private lending standards are automatically beginning to tighten because of the stress in the headlines so far in 2026. So you're seeing that shift. Regional banks benefit. That's where you get the loan growth.
Deregulation in the banks.
All right. Take a break. Good segue. Thank you. We'll talk about Bitcoin coming up. Oliver Rennick is tracking the options action from SIBO in Chicago. Don't want to miss that next.
Low tick alert minus 800.
All right, low tick alert. Okay, a low tick alert. So S&P is sitting on top of the 50-day. The interesting thing is all right, moving back down into the range. Let's see what the hedge flows look like. We know that we got support down below. And the New York Fangs don't look that great. However, the S&P Equal Weight Index looks just fine. We did make a new all-time high. That is close to a gravestone doji, so we could pull back in for the next couple of days. But this is more bullish than it is bearish. really bullish, neutral at this point, but certainly bullish. Let's look at junk bonds. Junk bonds, if above the 50-day, that would be good. They are not above the 50-day. The 10-year yield, want to see that move lower, close at the lows of the day would be good. Or just continue to slide down this lower Bollinger Band.
It's the sell-off that never ends, Scott. Michael Saylor's strategy, MSTR, down another 7% today, extending its one-year decline to 77%. Bitcoin's down about 45% over that period. My conversations with crypto managers suggest even the Bitcoin diehards are losing patience with Saylor's equivocation on whether or not he's buying, selling, or at what point his elaborate financial structure starts to stress. Judging by his preferred stock dividend product, STRC Stretch, things are dicey. It's about 23% off par value right now, but for a product that's supposed to stay at 100, options flows are perfectly divided between puts and calls. And in MSTR, puts are dominating 2-1, 50,000 puts plus bought versus 25,000 calls. And Bitcoin ETF IBIT, the skew is even bigger with 184,000 puts versus 65,000 calls. But the point for Stretch, Scott, is that if you believe Saylor, calls back towards 100 should basically be free money, but people aren't jumping on them.
Yeah, it's good to have that reporting. Oliver, thank you. It's a big day for us, by the way, at SIBO in Chicago. Our Brian Sullivan is there right now. We'll go back to him for a look at what's coming up ahead. Sully, you there?
I am right here, Scott. Listen, this is going to be a big couple hours. Kelly and I are live here on the SIBO trading floor, where there is a trading floor. It's one of the most important exchanges in the world. I mean, index options, this is all happening right here. And we've got a huge lineup, guys. Really appreciate the promo. We've got Austin Goolsbee, the Chicago Fed. We've got the CEO of the SIBO. We've got the CEO of Northern Trust. Diane Swamp will join us as well. We'll talk a little Chicago sports as well. Scott, I know you're a big sports guy. Do we really think the Bears are going to be the Northwest Indiana Bears? We'll talk about that as well. Big move in the markets. Oil is up as well. Micron. We got it all covered live in Chicago. I cannot wait. We'll see you in 10 minutes.
All right, good stuff. We'll look forward to seeing you then. Brian, thank you. Brian Sullivan. Santoli's next.
Okay.
To those guys, and we respect them. We've named our trophy the Julius, Dr. J, Irving, Trump.
This is an important breakthrough in terms of technology development, but I think the aspects of the business.
Yeah, what is IBM doing anyway? IBM was up this week, consolidating right now, so it needs to get above the 200-day. Once above the 200-day, we could look for a trend to develop like Home Depot is showing. 200 days overhead, but the trend is starting to develop. Same thing with DoorDash, starting to trend off the lows. Uber, big reversal. Looking for it to get back above the 50-day, the green line. Intel at highs. It's still technically trending outside of this upper zone.
upgraded the stock to overweight from neutral. They raised their target to $291.270, citing that the software business is improving, especially the hybrid cloud aspects of their software, as well as AI hardware and silicon.
George, where do they fit in this narrative? Because, you know, the Red Hat acquisition, they're trying to monetize that even more. But where do they fit into the discussion as far as AI goes? Is it going to be on the software side? Is it going to be on the hardware side? I know they've got some other, sticks in the fire here as far as quantum computing, what happens with that over the next 5 years. But, where's their mark basically in AI as that infrastructure continues to get invested in?
So that's why I brought up, Tom, the aspects of the price performance. You can see that anytime there's some development breakthroughs in quantum or networking, for instance, the stock goes higher. But anytime it gets tied back into software,
All right, so we had a little drop there in the S&P, and we're still kind of chopping around, as you can see. S&P hasn't moved much. All right, so you might want to take some lunch or take a break because the markets are just chopping around. Monitor the stream. You'll hear whether or not there are low tick alerts, etc., like we had a few minutes ago. We're right at the 50-day, so this could go either way. My 2 cents, have some hedges. If you have a lot of longs that are maybe August and beyond, maybe you don't need it so much. Maybe you have a smaller hedge because we're probably going to bounce at some point into July. Right now, we're just seeing a lot of rebalancing going into the end of the month. But if you want to do some spreads, what I took is purely a hedge, is not a trade. So what I took was a spider put spread, put fly, I should say. I took a spider put fly at 725, 700, 675. You might have noticed Brent talked about that in the morning update. Okay, so the center of my fly is right here at 700. In case we start to fade, this started making money this morning, retreated a little bit, but it was up $100 per contract. I have 5 of these right now. So if this starts to move down towards 725 in that lower band and starts to grind lower into the month end, the maximum profit you could make if it pins right at 700 is $4,400. $270 investment. We took this a couple of days ago. But we've been respecting the 50 days, so we might bounce here, actually. Higher low, lower high. It's a triangle pattern for now. I just have this hedge just in case, the 50-day goes and we just drop off. For now, we look okay. Just looks like rotation. If you check out the New York Stock Exchange, it tells you the same thing. New York Stock Exchange is hanging in there. We sold the all-time high. Okay, we made another all-time high last week. We're just shy of that level, 23,850, I think it was. So we're above the 920 50-day. Those are all up and to the right, along with the 200-day.
exactly right. You know, there's a lot of pluses and minuses about butterflies. First, the pluses, very low entry, right, with a big payout if you're correct. Now, the difficult part is it's hard to be correct. Sometimes you feel like you got to hit a bullet with a bullet to get anywhere near the peak profitability. And as you know, you get paid very late. You got to hold this till all the way to the very end to get any significant return.
All right. Just kind of grinding a bit lower right now. So if you need that hedge, the way you structure it is you buy one wing, that would be the 725. You sell two of the 700 SPY, and you buy another wing at the 675. So the two that you buy outside, the wings, and the two that you sell in the middle balance out. It's an inexpensive way to hedge instead of just buying outright puts when VIX is high. Okay, VIX is fairly elevated, so you'd paying up for straight puts. If you don't have a problem with that, you can go for it. VIX is starting to move a bit higher as well. I just chose to do butterfly because it's inexpensive the way to make a decent amount of profit on a cushion for a hedge. I will say I was very surprised to see Micron do what it did after a couple of days off the highs. It just zipped back to the highs. But think about it. You see the 21 day? That's showing conviction that institutions keep buying this stock. Moved above the 50-day back in April, and it hasn't looked back. It's held the 200, the 21 day, so it hasn't stopped anyone out. That's using the 21 day as a trend mechanism. Back up to the highs. I was very surprised to see this move as much as it did to the upside. And note the Bollinger Bands are opening up. RSI is rising. Volume has picked up. MACD still, it's holding up very well in the upper half of the daily range. Very nice move on Micron. RSI rising, top of the Bollinger Bands. MACD stochastics are bullish. New York Fangs look terrible. That's why I want to keep referencing the equal weight, because that excludes the weighting, the 37% weight in the S&P 500. Now let's look at the XII. That's a good idea. This is the ARCA Institutional Index. This is what institutions hold in their portfolios, core positions, XII. Let's see. XII. Okay, so red candlesticks or red sticks. So it's below the 50 days. So they look like they're selling up here. Okay, you had a rounding top back at the beginning of the year, a rounding top into December, into the weakness into February, March. Now we're bouncing, a little bit of a pullback. Do we get all the way back to this breakout level? Right now, the equal weight index says no. Equal weight index says that we're probably just going to continue. Momentum is trying to change direction. We're right back down to this level we bounced at a couple of weeks ago. The biggest determining factor is the equal weight index, though, because it removes all these big stocks, New York Fangs. Let's see what that looks like. New York Fang. I'm not doing anything at the moment. That's off the low, so that's looking good actually. If we get more of a bounce out of this in the day, I would think that we're probably going to go down to the 200-day. But S&P is trying to turn the corner. S&P is trying to turn back up. All right, S&P just kind of sitting here. All right, I'm going to make some lunch. I'm your host, Cuz of Income, at you from theclosingprint.com. It is Thursday. It feels like a Friday. It's Thursday, June 25th, a little bit after 1 p.m. I'm going to go make some lunch. Give me about 5 minutes. I'll be right back. Put something on in the oven.
Which indeed would be the most comprehensive housing affordability law in a generation. The main objective is to bring down costs by removing red tape for home builders, incentivizing construction, and limiting Wall Street investors from scooping up supply. It was applauded by economists and is something you do not see in Washington, D.C. these days, supported overwhelmingly by both parties. It cleared the Senate 85-5 and the House 358-32. And Trump was supposed to sign it in a big ceremony Wednesday at noon, but the president decided to throw a Clayton Kershaw curveball into the mix. In a series of social media posts on Wednesday morning, he declared he wouldn't sign the housing bill until Congress passed a law that tightens voter registration laws around the country. He said the housing legislation is, quote, of minor importance compared to lower interest rates, and it pales in comparison to passing the Save America Act, which is the voter ID law. So, Toby, a plot twist nobody saw coming. But while the bill remains in limbo, it's a great opportunity to talk about what's in it and how it aims to bring down housing prices.
It just feels like an own goal too, because you did mention the quote from Press Secretary Caroline Leavitt, the most significant piece of housing affordability legislation in American history. So you say that after the passage, Republicans are at this press conference talking up the virtues of the bill and how Trump was supporting it. Trump's political advisor for the midterms called it a signature commitment, which is why the gambit is so troublesome, because some of the poll numbers on affordability in the economy is just not looking good for bill that could tell the story that you're helping with affordability feels like a pretty big risk, especially because it's not even a great piece of the leverage when it comes to the other bill Trump wants to pass. Because if a president has 10 days to sign a bill, this is something actually.
Yes, I didn't learn this in school after all.
I know, that's exactly what I was going to say. The president has 10 days to sign or veto a bill. If he does nothing, it automatically becomes a law. So either Trump has to veto it, which, again, a lot of people say there's a lot of good stuff in this bill, so he's probably not going to do that. So you're kind of in this limbo period where the leverage that you were creating is not necessarily as powerful as you might expect.
All right, so let's end the bill here. How are we going to get more housing? How are we going to bring costs down? These is what the lawmakers have proposed. Well, number one, relax federal regulations on housing development, including removing some of those cumbersome environmental reviews so you get these home builders building more quickly and reduce costs for construction. For example, this bill would eliminate a rule that requires contractors to build manufactured homes on a steel frame with wheels and an axle. So there's stuff in the construction code. They go, oh, why do we actually need this? And they're trying to strip that out. It would also have the federal government create sort of a model zoning plan that local officials could look at and say, okay, let's just adopt this for our own locality, because this is really where housing gets built. It's at the local level, because based on local zoning plans. So the federal government can do all this stuff, but if local leaders don't take initiative and relax zoning plans to allow for more construction, then this doesn't really do anything. And also, finally, it's going to siphon off a bunch of federal grants, billions of dollars of federal grants that will go to localities, municipalities, regions that incentivize, that want to build more. So sort of a three-pronged assault on home prices. Economists say, look, it's not necessarily a panacea. Like I mentioned, a lot of this stuff happens at the local level. How much can the federal government do? But at least it's a start.
Yeah, the supporters of the bill say that the core root of the problem in America is too few homes and too much regulation and not enough construction. So that's why they were taking this three-pronged approach. But skeptics are saying that it's going to take years for the benefits to materialize. Some are saying, like, hey, if your rent just went up $1,000 in 1 month, hearing about housing supply maybe arriving in a few years from now, that doesn't do very much to you. It's not very comforting to you. The homes still need to get approved. They still need to get built. So if you're not providing immediate relief for renters, and some critics were saying, like, hey, this isn't actually delivering the savings that we should to everyday Americans, and the zoning laws being controlled at the state and local level, you're always have one arm behind your back in the federal government when it comes to trying to incentivize building.
This is a very salient problem for Americans. If you look at what they care about in polling data, it's housing inflation number one, and then housing costs 1A. Rents are up 38% from the start of COVID, and then if you own a home or want to buy a home, national prices for single-family homes are about 5 times.
All right, Apple's starting to turn up. It might be a buying opportunity for Apple longer term. Let me just check out some Apple calls. Let's see, Apple. Maybe out in next year, March or so. Let's see if there's anything out there that's been traded today. All right, looks like a lot of interest in the 290 strike calls. Those are going for $24. 290-300.
Let's move on. For decades, France treated air conditioning with the same contempt as ketchup on steak. It was viewed as a symbol of environmental failure rather than a normal modern comfort. But after the country reported its hottest day on record yesterday, that view is beginning to change.
Apple turning up.
Schools were forced to close. Hospitals struggled through stifling conditions, and 40 people drowned since last Thursday.
Let's see what Apple looks like. Apple had a big down day today on news. Okay. MACD stochastics could get down to the 200-day. That's something to consider for Apple. July tends to be a pretty strong month, so we'll see if that can turn back up.
schools are shutting down and hospitals are overheating because it shows extreme heat is becoming a major public health threat. But yesterday may have been a tipping point. The leader of France's Green Party, which has historically opposed AC, said this week that there are places where we just can't do without it now. It was 104 degrees in France yesterday in June.
Yeah, first I just want to emphasize how hot it's been. On Tuesday, France had its
Could be a hammer today for Apple.
Another record. Some parts of southwestern France was at 111.7 degrees Fahrenheit. That's 44.3 degrees Celsius for those keeping track at home. Less than 1% of planet Earth was hotter than France's hottest places on Tuesday.
What's up, bro?
Basically, there are only a few parts of the world that were hotter than France. The Sahara Desert, the million people can expect 100-degree heat, and you're sitting here in the United States where we are well air conditioned, and you're thinking about people without air conditioning. It absolutely boggles the mind that you can go through this kind of heat wave without cooling off.
Right. France has recorded 52 official heat waves since 1947. Half of them have occurred in the past 16 years. So clearly there's a trend of hotter years affecting Europe in general. And Europe is especially vulnerable to this because they also have a population that is aging. The number of senior citizens in the EU has increased 40% over the past 2 decades. So when we talk about it being a public health issue, senior citizens are the most vulnerable.
Apple starting to turn a little bit. S&P turning back up. Apple turning off the low.
Organization estimates more than 200,000 Europeans have died from heat over the last 4 years. It's a pretty staggering number and something that Europe has clearly thought about. The last bastion is AC. They've tried a lot of other things. They try to add more shade to their streets. They want better insulation for their houses. They want urban greenery everywhere. But at a certain point, there's only so much those mitigation efforts can do when you're facing down record heat year after year.
And this has become a huge political issue. Marine Le Pen, who runs the far-right party national rally, she's a presidential hopeful. She said, my plan is to just flood the zone with air conditioning. She said, quote, it is absurd to have people die because of the heat. If I'm elected president, I will put into place a massive air conditioning plan starting in places with the most vulnerable populations, hospitals, care homes, and schools. So her party wants to make air conditioning a huge issue and attack the other side for not doing widespread air conditioning rollouts. On the other side, you have a far-left leader who said absolutely not. Installing air conditioning everywhere would only mean increasing the damage, which means more carbon emissions leading to long-term heating. And also, there have been some studies that show that air conditioning in houses actually puts heat outside, raising the temperature by 2 to 4 degrees. But it looks like public opinion and the tide is shifting. Go back to 2003, 15,000 people died from a heat wave in France. That was supposed to spark a huge air conditioning rollout in the country, but in the decade since, it simply hasn't happened. You keep seeing heat waves in France and across Europe when they look at their air conditioning distribution for homes and also schools. 14% of schools have air conditioning. 40% of healthcare facilities have air conditioning. This seems to be a wake-up call moment for them.
Moving on, for many years, Wendy's stock has looked like Wendy's hair, red. But yesterday, everything changed. Shares exploded higher, rising as much as 42% before settling up around 25% after the company named former Potbelly exec Steven Sebelius as its CFO. Wait. A 40% move for a CFO? What is this, a dude, a freak in the spreadsheets? Well, there's more to this story, and it traces back to Reddit. A singular post on the Wall Street Bets forum pushed the struggling fast food maker into meme stock territory after a user posted a screenshot of the stock, which is down 72% for the past 5 years, with the caption, "We need to save Wendy's." And just like that, the game was afoot. More than 14 million shares changed hands before the stock unit opened yesterday, which is more than AI darlings Intel and Micron. Part of the reason for the rapid embrace of Wendy's is that it ticks all the meme stock boxes. Stock recently hit a 13-year low, so it appears cheap. It has a familiar brand name, and there's some short interest as well. Toss in a Reddit post and some fresh, never-frozen beef. That's all the ingredients you need to create a meme stock this day and age. Wendy's has been down
of saving, whether by this new top values guy or by the Reddit army. The bottom quarter of 2025 was its worst
Apple,
20 years. Same store sales.
Microsoft's starting to turn. It looks like stocks are starting to get bought. Okay, stocks coming off the low. Okay, dip buyers are coming in. Okay, looks good. Intel. Yeah, I still got Intel from earlier.
So the fact that that value pop disappeared is something that is absolutely going to sink you. It is fascinating though because people still like Wendy's, just not here in the United States. Because international sales jumped 8.1% in the past quarter, so that is far better than what was going on in the U.S. where sales were declining. So for whatever reason, they have a taste for Wendy's abroad, but not so much in the United States.
You're surprised that international people like American fast food. I thought we put that discussion to rest in the past week. It's clear that they love it. So there's a new CEO in there, Robert Wright, as I said, who used to lead Potbelly, who did this big sale to they got taken private. But I'm just so surprised that Wendy's has not done well in recent months because they have this interim CEO, and his name was Ken Cook. How can a guy named Ken Cook not bring Wendy's to extreme financial success in there? So he just explode sales.
Ken the chef, actually. But yeah, I think it's very funny too that the Wall Street Bets part of it had no substance at all. Like obviously we've seen stocks jump on even less than this before, but if you go back to the GameStop era, there was at least a thesis attached to it. Like, hey, I think this is undervalued, and then everyone rallied around it. Literally was one post of the screenshot. There was no other text on the post other than let's save Wendy's, guys, and it was off and running. So it just shows what market forces make stocks move today. It's not the same forces that made stocks move in the days of old. All right, we're going to take a quick break and come back with news numbers right after this.
Filing through forms for new car insurance rates can take forever. You can count on Credit Karma to speed things up because Credit Karma shows you personalized rates from top providers without the extra legwork, so you can get to the coverage you need ASAP. Download Intuit Credit Karma to get started.
What happens to all the challenges and all the motivation to start? Did everyone already hit their goal? Did they achieve everything they were hoping for a month ago? Motivation is a lie. The plan is the truth.
I'll be honest, when Tanglock first approached me to be their legal counsel, I said no. Like most of you, I assumed these games were just another trap. But as a lawyer with nearly 30 years in the field, I did my due diligence. Tanglock is 100% legitimate, and their payout process isn't just fast, it's secure and fully transparent. Of course, before I officially signed on, I had to experience the game for myself. Honestly, I couldn't put it down. It's a fantastic game. Trust me on this one. Give Tanglock a shot. You won't be disappointed.
Tanglock, see the god, get the gold.
Thanks, Jim. Everything rides on this response. Everything.
It can't be. Only one move remaining.
All right, so we bounced a little bit, already starting to roll over. S&P, Apple looking okay. AMD turning back up. I did want to get to some AMD, but decided I'll wait until next week. I have been looking to reduce my risk. I haven't added to the put flies either. Haven't added to put flies.
Welcome to Neil's Numbers, where I pick 3 stats from the week's news that will help you graduate from one of Canada's top business schools with really good grades. For my first number, it pays to be a big-time CEO. Last year, more than 25 executives made over $100 million, the most of any year since 2021, and almost 12 made over $200 million, according to the Wall Street Journal's annual rankings. Number 1, you won't be surprised to hear, is Elon Musk, the world's first trillionaire. In 2025, his total compensation from Tesla came to $158 billion, which is 16 times the combined value for the other 391 execs in the journal's rankings. Number 2 is more surprising. Shank Mitra, the CEO of the real estate investment trust Welltower, received compensation worth $821 million, which is one of the largest pay packages of the last decade. In fact, you don't even need to be the CEO of Welltower to afford a PJ. 3 other execs there got pay packages worth more than $100 million each. Another interesting finding from the rankings: you don't need to run an established mega cap company to be rewarded handsomely. According to the journal, over half the CEOs that made over $100 million last year led companies not in the S&P 500, including Dylan Field of Figma, $864 million, and Kaz Najatian of Opendoor, $741 million. Toby, after a couple of years lying in wait, looks like the moonshot pay package is back in vogue.
My immediate thought when you see numbers like this is the pay package correlated with how well the stock performs? And Wall Street Journal kind of plotted it on an X and Y axis. It's not correlated.
VWAP too.
It's a bunch of random dot points. So the highest paid CEOs aren't always necessarily the best performers. I mean, one of the best examples is Robinhood had the best shareholder return of all of their rankings, returned 240%. CEO Vlad Tenev had $3 million in total compensation. Of course, he was coming off a much larger.
All right, let me grab my lunch. I'll be right back.
That's a data point showing that it's not always correlated. Some of it is semi-correlated, though. Warner Brothers Discovery CEO David Zaslav brought in $165 million. That company ranked 4th in shareholder performance in the top 10. He brought in $205 million in compensation. Broadcom ranked 7th in the performance. So you would love it to be a line that follows between what you're paying your top dog and what the top dog is bringing in for the company, but that's not always the case.
For my next number, the U.S. is no longer super when it comes to supercomputers. In a new ranking of the world's fastest supercomputers, a rig from China bested America for the first time since 2017. It adds to the growing concerns that China's tech innovation is catching up with, or in some domains even surpassing, the United States. The supercomputer that got China the crown is called Lineshine, an enormous computing system in the tech hub of Shenzhen. In the test, Lineshine was found to be 20% faster than El Capitan in California, which had dominated the rankings since 2024. Lineshine impressed researchers not only for its speed, but also by how it was constructed. Lineshine utilizes regular microprocessors known as CPUs rather than graphics processing units, GPUs, that traditionally power supercomputers. That's a key distinction because the U.S. has placed export controls on top-end GPUs made by NVIDIA and AMD to China, but CPUs have gotten a hall pass. This loss to China could cause a rethink of that arrangement. This isn't the first time a U.S. supercomputer has been bested on the world stage. Japan was number 1 from 2020 to 2022, but the fact that this defeat came to main geopolitical rival China at a time when the stakes feel so much higher with AI stings a lot more.
Now, this in a vacuum is not that big a deal because if you go back to like what AI systems are running on, they're not really running on supercomputers. Most of just like the normal GPU clusters that AI companies in America make are far more efficient. But when you zoom out to what it represents one, China innovating around bottlenecks. That is something that a lot of people were scared of when you put in these export restrictions. Is they'll just find a way to do it without it, and maybe speed up their innovation cycle. So that's one issue. And then the two, it is a historic reversal. For decades, it was basically like America innovates, China comes in with cheaper ways of doing it, and they copy whatever America was doing. If that starts reversing and they can do it for cheaper, that is a total rethinking of what we thought Western versus Eastern technology was kind of looking like. So it undermines that assumption. So in a vacuum, not that big a deal, but when you zoom out, it could be a very, very big deal.
For my final number, the rate of divorce across groups has been declining in recent years, except for one, boomers. The New York Times reports that Americans in their more advanced years are pulling the plug on so-called empty shell marriages that have lost their sparkle. Here are the numbers. Nearly 40% of divorces now occur between people 50 and older, after rates doubled between 1990 and 2010. Surprised? Here are some explanations from sociologists for the rise in gray divorce. The main one is, and I'm going to put this crudely, you used to die before you realize you don't like each other anymore. Lifespans are going up, people are living longer, and maybe we weren't built for monogamy that lasts 50, 60, 70 years. Justin Garcia, the executive director of the Kinsey Institute, told the New York Times, we as a species are in longer relationships than our ancestors ever were. Another reason, expectations of marriages are shifting. Half a century ago, spouses mainly linked up to form a competent household based on traditional gender roles. Now, people are settling less and looking for that soulmate, even those already in marriages. So apparently people get sick of each other after a while.
There's also just more fish in the sea, or at least more means to catch those fish, because online dating app usage has obviously expanded over the last decade. It's also expanded for seniors as well. 14% of Americans in their 60s and 12% of those in their 70s have used dating apps. So maybe you feel like there's still options for you out there after divorcing. But on the other side of things, like, it's still a very, big thing that happened very late in your life. There's definitely trade-offs that come with the rise of gray divorce as well. Psychologically, it often takes longer to recover because you've been in a relationship for so long. Men are more likely to find new partners after divorce than like that women are. So there is definitely some drawbacks to it.
That is all the time we have. Thanks so much for starting your morning with us, and have a wonderful Thursday.
So Daniel, let's run it back tomorrow.
It's right on your countertop. It's next to your veggie crop. It's wherever cookbooks go. It's high and down below. It's right here. It's right there. It's where others wouldn't dare. It's in hands, it's in looks, it's more things to look. It's like this, it's like that. It's wherever summer's at. It's for medium, it's rare. You're better. You'll fit anywhere. Even there.
Save Yeti from himself. Play Candy Crush now.
NVIDIA starting to turn too. A little short covering on NVIDIA. NVIDIA looking pretty worse for wear. It is near a previous low, hammering at that level. Apple coming off the low. A little bit overdone, I would think. Intel pushing above VWAP. Intel trying to push above VWAP now. Where did my VWAP go? Where is my VWAP? There it is. Okay.
Good morning and welcome to Opening Bid. I'm Bertama in for Brian Sazi. Here's what we're watching today. May's PCE report showed headline inflation rose 4.1% from a year ago, its highest since April of 2023. Meanwhile, core inflation, stripping out food and energy costs, that rose 3.4% year over year. Both measures came in line with estimates. But this raises questions for the Federal Reserve. Bank of America is already pricing in 3 rate hikes for the rest of the year, while investors broadly are expecting at least 1 hike. Oil prices are back at pre-Iran war levels, according to Gas Buddy. The average price per gallon of gas has also declined by 67 cents from a month ago, but that too could pose risks to the Fed. But the market story of the morning, Micron's blowout results. The memory chip maker reported record revenue of $41.5 billion, as well as record gross margin. The AI memory surge is alive and well. Here to break it all down, the economists say Stebbins report research founder alongside Yahoo Finance's Inez Brain, Derek Woodtree. Tom, I want to get to you. Let's start off with that Fed's preferred inflation.
Apple, Intel.
Did come in better than expected.
Apple's back to VWAP now. Trying to get back to VWAP. Feels way overdone, Apple. Selling volume this week. So it's raising prices on its machines. I was wondering how long it would take before they did that.
And this definitely qualifies as not too bad. And so the logic goes with oil falling, we're going to see these inflation indicators probably peak right around now or next month, and then begin to decline into the third quarter and into the fourth quarter. And that is going to take the pressure off the Fed to hike rates. I think 3 rate hikes this year by Bank of America is aggressive. Is it possible? Sure it is. But I think that the deflation numbers we got this morning should definitely be viewed as not as bad as feared. And in this type of market, that's a good thing.
And let's catch us up here, because I hear you, Tom, I hear what you're saying, but at the same time, we did have Kevin Warsh come out with a more hawkish tone. So is anyone on the street worried that this could add more fuel to the fire in this?
Well, you do have that BFA call that they're expecting 3 rate hikes, 25 basis points by the end of the year. But you have most of Wall Street, quite a bit of the Wall Street term banks.
Most stocks are just grinding along. They're not really moving that much.
Hold rate steady. Because of the points that Tom just made, also because, of course, of energy prices that are coming down, and so the Fed would seek past this sort of spike that you've seen in inflation. Keep in mind also that Kevin Warsh talked about these task force. So even though this PCE came in line or perhaps a little bit better than expected, we still have the Fed that is going to be looking right over this data and figuring out how should it be reading data in the future. So that still remains to be seen.
And then as you bring up something that's really important this morning, because we are seeing oil futures move lower, and Thorsten Slot saying in a note yesterday that this could add more to Americans' wallets. And Jared, I know you're watching that as well.
Yeah, a nice chart from Thorsten Slot. Chief economist over at Apollo. And let's show this on the Wi-Fi Interactive, because you had been seeing oil and 2-year rates kind of move in lockstep. But here's the key thing. When we first saw these elevated energy prices, we thought this would feed into inflation, but it would be somewhat transitory. And so the irony is that now that we have oil prices and they've dropped so much into an overheated economy by some measures, guess what? That's going to be even more inflationary. So that right part of the chart where these 2 lines diverge, that happened right around the April CPI report. And you can see that 2-year rates have gone higher. Meanwhile, the price of oil has gone lower. 2-year rates are kind of a proxy for where the market might see the Fed's short-term rates going. And so this just tells us that there's an increased chance of the Fed hiking rates. And in fact, I went back and I looked at the Fed rate hiking odds from last Tuesday, right before the Fed meeting, right before Warsh
2023. That's a half rate hike, and that matters in only 1 week. So I think we're going to be hearing a lot more about this. This is the one thing that the market is kind of scared of, is that the Fed has to hike more than anticipated.
At the same exact time, given that oil is falling lower, I mean, this could have ripple effects for gas prices. It seems like we're already seeing that. I was reading a post on X this morning from Patrick DeHaan over at Gas Cutting. He actually confirmed that gas prices are now falling faster than they did.
AMD rising a bit more now. AMD back above EWAP.
Coming for the consumer, could we see lower prices at the pump even maybe sooner than expected?
Yeah, sure. I mean, you have quite a bit of analysts that are saying that by July 4th, you're going to see gasoline prices at $3.75. That's still the second most expensive July 4th apart from 2022.
AMD starting to move back above VWAP. Could be good for chips in general.
As you noted, almost 2 pennies per day that you were seeing those gasoline prices falling. And look, this is what has been sort of choking the consumer, these higher gasoline prices. And so, yes, the theory is that if they're spending less on gasoline prices, then they have more to spend elsewhere.
And let's stick with you, but let's switch gears a little bit here, because one of the top stories today is that Micron report. I mean, this was an absolute game-buster report, absolute seller, pushing the Nasdaq higher this morning. Walk us through some of those results, but especially that Q4 guidance that really seems to be boosting analyst outlook here.
Yeah, look, and it's the magnitude of the beat that really is driving the stock higher, that shocked investors. The fiscal fourth quarter revenue guidance coming in at $50 billion versus estimates for $43 billion. Also, earnings guidance of $31 a share. The expectation was a little bit more than $25. And their gross margin, their adjusted gross margin, that topped 84. It came in 84.9%. That beat estimates of 81.83%. So just the sheer beat of all of this has been driving this stock higher, and also the fact that they're saying that there's no line in sight of when supply.
AMD looking good.
So that speaks.
I am considering de-risking for what it's worth. It is Thursday, June 25th. We're coming into the end of the month. Tech has shown all signs of some rotation into other sectors like financials. That's been looking pretty good. Financials, XLF did pull back a little bit from the highs. Wells Fargo pushed back from the highs. Okay, but still sitting on top of the 200-day. Industrials did very well. That's holding on a little bit better. Industrials like Caterpillar at the highs of the day. Caterpillar, John Deere, Danaher, Boeing turning back up. So industrials look pretty good too. Industrials. The home builders and the home improvement group, Home Depot, turning back off the low now. Home Depot, Toll Brothers, those all look good. The travel and leisure airlines have been pretty good. Those gapped up and faded a bit. So people are quick to take profits, but there is rotation. And we look in RSP, the equal weight index, it faded from the high today, but looks good. The equal weight index just about ready to make a new high. Okay, the S&P equal weight, the previous one was the Invesco. S&P equal weight, that did make a new all-time high. Okay, it looks a little bit better than the Invesco version on the daily. So keep in mind the major indices, the big indices with lots of stocks like New York Stock Exchange still hanging in there at the highs. Could this pull back if everything else starts to fall apart? Surely it can. But for now, this looks pretty good.
2021 kind of echo-ish here. So I'm thinking, you know, if this has legs, we're going to see this continue for weeks. But if it is just a meme stock trade, we'll probably see it peter out in the coming days. So just give it a few days. We'll see.
All right, we'll have to watch this one. But in 2021, Wendy's did get a little bit caught up in that meme stock rally as well. So it's interesting to see this happen yet again. Huge thank you to all three of you. Thank you so much, Tom and Naz and Jared. And coming up, the retail landscape with Tapestry's CEO. That's next on Opening Bid.
Okay, New York Stock Exchange trying to turn. Apple getting a little bit of rejection at BWAP. Apple. Microsoft just made a new low. Nvidia's turning back up. AMD turned back up. AMD. Okay, Intel. All of these turning up. Okay, we got a little bit more than 2 hours to go.
We always prioritize each other.
AMD trying to push higher. S&P just grinding.
Yahoo Finance bringing you more elite interviews from Cam. The Tapestry CEO sat down with executive editor Brian Sozzi to discuss the state of the luxury retail market.
How do you explain all the momentum behind the coach right now?
Well, I think it has to start with our team. We have a great team, and we built our growth engine by design, and it really really is fueling a culture of creativity. So bringing it back to why we're here at Cannes, we've defined our target market. It's a massive TAM. We speak to a lot of consumers, and we've really gotten focused on this point of market entry, young consumer who's buying a luxury handbag perhaps for the first time. We want to earn the right to be that customer's first luxury bag purchase. And as we get really focused, our team is insatiably curious about how to do that, how to be relevant for that target customer, bringing all of our brand building capabilities that we've intentionally built over the last 7 years together with the creativity that customer is craving. And so when we come to a place like this, I think it explains that real insatiable curiosity that our teams have to learn what's new, to understand culture at a deeper level, and connect the consumer to our brands on an emotional level. And that's what's winning the day for Coach.
I came across this stat, and it's something I had thought about for a while. Maybe Trump was getting old, and it was from JP Morgan. And I think it said 25 million people turn 18 every year. And I'm like, that is a huge driver of your business.
All right, Marcus is just sitting here. This is ridiculous. We're not going anywhere.
And we hear these stories. It's authentic to who we are. If you think about, and you and I have been in this business for a long time, is we do work with consumers. We hear frequently about Coach or Kate Spade and just the fond memories consumers have. It was my first luxury bag purchase. I remember how it made me feel. So those two moments of inspiration for us this is authentic to who we are. We are a brand that speaks to actually 2 billion people around the world can afford to buy one of our handbags. And so with that large an audience, we had to get focused. And we became focused on this first luxury bag buyer because it is so authentic to who we are. And the great news is that 25 million women in the markets where we serve today will turn 18 this year and every year for the next 10 years. So that provides a tremendous opportunity, but that's all that is. It's opportunity. Then we have to do the work to understand culture, understand the customer, take those insights and bring them forward with great products, great brand experiences, and great marketing. And that all comes together in service of the brand and the emotional connection with the consumer.
So that 18-year-old, when they walk into your store, look, you're 18 years old. You're not a lot of money. They're not probably buying an $800 bag. When they walk into your store now, in that Coach store, what are they buying as their first bag?
Well, an interesting insight, Brian. A Gen Z consumer gives us about 60 seconds when they cross the threshold of a store to determine whether they want to be there. 60 seconds is all we have to have that customer feel like it's a brand for them, that they're in a place where they can be engaged. So we spend a lot of time understanding what's important.
Yeah, markets don't feel like they want to do anything. Hedge flows still flat inside of this. You can see where it's starting to, the red is starting to come into play here. We should see volatility pick up a bit.
Knowing that it's not important to just be in their face every minute. It's knowing how to give them help because they don't really want help, but they want help. And understanding that nuance. And actually, we have AI training tools that help our associates not only train to understand what to do, but then practice how to do it. And these AI training tools give tips in real time back to our associates, which is a less intimidating way to train on your techniques and the ways that we engage and approach our customers. So I would say that the takeaway is that we understand, we take it very seriously to understand what's important to our consumers, and then we invest. We invest behind not only the products that we're delivering, so, we can talk about the Tabby bag or the Brooklyn bag or the Terry bag, which are, tremendous Gen Z engagement vehicles. They love these bags, and the innovation we're bringing there is terrific, but it also matters the experience that we give them when they come into the store and the marketing and how they see us, where we engage with them on social media as well.
Chop. Choppy market right now.
And Brandon Gap. For him, it goes back to a store, I believe, the late 70s that used to sell music. And I was thinking of you all, amazing heritage, amazing story to tell there. How has channeling your heritage helped revive this business?
What is so critically important is that we're not just a brand for today. We are a brand with heritage, and to your point, we go back to that inspiration of the baseball glove. Our glove can leather was inspired by the leather in a baseball glove. I don't know if you knew this.
I got to tell my boss George, he's over there. He's a big baseball fan.
Yeah, because that is, if you probably still have your childhood glove or a glove. Well, you are still young, so you probably still use it too. But in our house.
All right. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's a very slow Thursday after Micron earnings. The market's gapped up and faded. Stocks are chopping around, trying to find their bearing at the moment. I've been de-risking for the most part. I do have SPY put flies down below 725, 700, 675 for a hedge, as most of my positions are longs. I am looking for a bounce, but we don't seem to be holding on to any gains that we bounced off of the lows at this point. NVIDIA back down to the low. AMD fading from the high. Very slow day at the moment.
This is an interesting one, because BlackBerry was formerly, depending on how old you are and how much you are familiar with their old devices, which is the old Research in Motion company, which was essentially one of the mainstay beginners and competitors in handsets, wireless handsets for consumer and enterprise-backed companies. Used to be sort of the primary mobile email company, but they lost a lot of their competitive edge.
Got a little bit more than 2 hours to go. I'm going to take about a 5-minute break, and I'll be right back.
pointed to why the price action in the name has been higher over the past year, but also, as Jenny mentioned too, especially in the last 3 to 4 months, the stock has done extremely well.
It has. I mean, it's shocking to me that we're up 170% quietly this year. Obviously, still in this recovery, but a really nice year so far for BlackBerry shares that I think we check in on a bit more here. But appreciate it, George, telling us more all of that breakdown and helping us close out the show today. That continues for Alex and myself. For Next Gen Investing, we have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we rock you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, not the same rate of change in WPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute to one minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
And one of the most important things is you're making a play for risk find way to grow in your earnings. So
Insights, flavor, and independent and trusted financial journalists, streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family was about?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for close 25 years, been purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
The market is moving fast. Are you ready for what's next? Join Schwab's panel of experts on Thursday, June 25th for our 2026 mid-year market outlook. From global energy spikes to volatility to inflation and the 2026 IPO landscape, get the insights that investors need for the second half of the year. Join us on Thursday, June 25th at 7 p.m. Eastern here on Schwab Network. Good afternoon. Welcome to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern Time. Coming to you live from the corner of Wall Street.
Okay. So slow. S&P turning back up. Intel's trying to make a new high. Apple higher lows. We're still stuck down here. Feels overdone. Love to see Apple up inside day, a gap up next week maybe, or tomorrow into next week. Cerebras, what's that doing? CBRS, off the lows, but still looking pretty haggard. All right. So our thoughts prior to earnings. Below the 200 put wall, we have to reassess the markets. We got to get some pivots here so we can understand what's going on. So we'll come back to this. SpaceX, SPCX, new IPO, of course. That's below the 155 put wall. Still basing down here. Still basing. All right, the way it looks right now, this is our high. And this is our low. Okay. We know what the IPO, it was IPOing at 135. It opened at 150. We're currently just above 150, the IPO opening price. So we'll see what happens in the days to come. My son seems to think this is going to be lower. Being his mindset is about rockets. He doesn't think SpaceX is going to do it, but I've been watching development. SpaceX recently did something right. SpaceX launches. Launch results. Okay, SpaceX. Starfall reentry capsule. And sticks the landing. Okay, so there's a lot of good things going. I don't know. I think we're going to be fine with SpaceX. Long term, looking at the long term.
Low tick alert minus 800.
All right, so there you go. A low tick alert. S&P back down to the lows. Okay, they're trying to. I think they're trying to push this 50-day issue, a loss of the 50-day, trying to get people to sell, get a little bit more consolidation. All right, so what could we plan for? Maybe something like this. This is speculation, but just using a parallel and recent pivots, if we were to lose the 50-day, that put us right around this level here at 72, 725 probably by tomorrow. Maybe a gap down to 725, 7,250 here. Okay. The spiders. Okay, spiders. I have the 725, 700, 675 put fly. All right, so maybe something like this on the SPY. Okay. So I put fly, one wing is at 725, 725. 720, 725. $700. These are puts. Puts. Two times short. I don't know why it didn't save. Okay, there we go. $675, $675. $675. Put long. Okay, so this is the put fly I have on. In case we start to drift down here into this channel. Okay, I'm looking at this as a channel consolidation over the next couple of weeks into the end of the month, and then rally in July, and then back down in August. That makes a lot of sense, actually, when you think about it. Lower short term into the end of the month, bounce into July, maybe retest the high, and then roll over in August. August tends to be one of the weaker months of the year. So, and we've got midterm elections, which should create some volatility. Microsoft turning up. There goes Apple. Okay, so this could all be for naught if they decide they want to start buying down here. Apple feels way overdone. That's just my 2 cents. Feels way overdone. Feels like this could bounce pretty furiously. Apple doesn't have the same amount of CapEx expenditures that concerned a lot of the hedge funds, etc. The CapEx that Google is spending, $80 billion, for example, as secondary in order to get that money for their CapEx. Apple's not doing that. They're just piggybacking on Google using Gemini among other resources. Watching over here on the left, the 5-minute chart, Apple. See if it can't get back above VWAP. Intel's trying to push a bit higher, so we might be able to salvage the day. But for the purposes of a hedge, just in case the markets fall apart, this is what I have, okay? All right, put flies. I got 5 of those for now. $725, 700, 675. This is something good for new options traders to learn about. How to do put flies, how they're structured, and why you take them. Okay, you could go straight puts, but VIX is pretty expensive. So at any rate, SPY is starting to bounce off the low, which is good. Ten-year yield. 10-year yield moving back above 4.4%. IWM in response. IWM off the best levels of the session. We hit 301, 301.50, it looks like, the high of the day. 301.50 was the high of the day. That was a new all-time high for IWM. Apple looking good. Apple looks good. Apple.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com. All right, we are back right here on the watch list. We're watching shares in Micron, which spiked to new all-time highs following memory chip makers' latest earnings report really well at Wall Street. Tech standout did top third quarter estimates with an adjusted gross margin of about 85%, quadrupled from a year ago. Micron's move comes after announcing $10 billion capex spending in its fourth quarter, which brings the yearly total to about $27 billion. You're taking a look at the charts here. Micron shares are up more than 1,000% from the 52-week low that we saw last August 2025. Stock notched a new record today, up 325% this year. And here's some of the other memory stocks in the group. You see double digits. SanDisk is up 20%. Now, Western Digital and Seagate also had double-digit gains earlier, but they're still holding on. Western Digital is up 5% and Seagate up 3%. Paul Meeks is with me, head of technology research at Freedom Capital Markets. And in your notes, you talked about Micron. You say, wow, you love what you heard and you love the visibility. You're saying, look, we've watched this stock for decades and we never had visibility like this. Tell me why today feels different.
The interesting thing about Micron and all the DRAM suppliers, so it's essentially a global triumvirate. With Micron, you have the two South Koreans, SK Hynix and Samsung. However, they're commodity chips, and I've been covering Micron since it went public in the 1980s. What is different now is that demand is so strong, and their supply, and that of the rest of their triumvirate,
IWM still fluttering here.
that they're now signing agreements, and these are big dollar agreements, with all of the major hyperscalers. And these are take-or-pay contracts that last 3 to 5 years, depending on the contract, and they're locking in prices. This is unprecedented for a commodity vendor. And so, right now, everybody knows that earnings for Micron are skyrocketing. And so, if you take their earnings flow and even multiply it by a traditional
Okay, Apple, looking for some more upside on Apple. All right, we're right at VWAP, so Apple's right at VWAP. Let's see if we can't get the follow through. We are way overdone, in my opinion. Could see more downside, so there's that risk. Gapped below the 50-day. Above the 200-day. So we could test this first and then bounce. I don't know. We'll see.
Believe it or not, even after this big move, could take this stock meaningful higher.
You talked about that 10 times, and that was sort of the peak that people were referring to, right? And that right in that tech bubble, right in 1999, when Micron gets up to this point. But to your point, you talked about 1320 as a valuation, and now you've driven your valuation higher based on new numbers. Where is it hovering now?
So at first blush, based on what I heard last night, and obviously I attended the quarterly webinar live, I think 1600 is the next stop, but I could make a case for even a higher multiple.
And how quickly do we get to a number like that?
I think that their peak greatness will not be next year. It'll be their fiscal 28. So between
Microsoft turning, short covering.
this company
Okay, we got some short covering. Looking for some more follow through. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com on a boring, super boring Thursday, June 25th. It's got about an hour and 45 minutes to go. Hoping to see some more activity here. Apple push off the low and start headed back up towards the 50-day. Would be lovely to see a hammer by the end of the day. Microsoft, big short covering right here. Microsoft short covering. There goes Netflix short covering.
So when you look at the group, Micron obviously shining today and getting a lot of accolades, well deserved based on the earnings and the outlook. What about the other names? I mean, we're showing SanDisk up 20%, Seagate up 3%, Western Digital 5%, On is up 4%, Analog Devices is up 2%. Some of these other names in the semi and or memory chip, which memory chip, that boom is continuing. Are all of them in a good place?
I don't necessarily think so. I think that in a particularly good place are the DRAM and NAND suppliers, right? The triopoly that I mentioned. And it's very interesting because in a week or two, SK Hynix, which had not traded beyond local shares in South Korea, has an ADR that they're listing in the States. And I think that'll bring not a threat to Micron, but more love, because as they tell their story to American institutional investors, everybody will just feel good about the whole group. But indiscriminately, every semiconductor stock going up, I don't think that's warranted.
As we talk about this, we also think about the AI build out, and seeing the numbers gave people a little sense of relief. But the AI build out, the CapEx spend, but it's all underway. It's not a bubble. It's not over. People were feeling a little better. We had a great conversation with the CFO of Qualcomm today. So where do you think we are in this AI build out?
I feel very comfortable that we'll be spending hot and heavy all the way through next year and definitely into calendar 28. Now that's at a minimum. It could go longer, but right now I feel very comfortable. And you think about an analyst like me, where I have 1 to 2 year price targets, it's well within my investment horizon. It could go longer.
Yeah, and you mentioned names like SK Hynix and Samsung, and SK Hynix is raising capital and will be listing on the NASDAQ, right? What do you think of that?
I think it's great. And some people have been asking me, well, Paul, when they get on the institutional equity roadshow, right, going to see people like me in the United States kind of pound the table on this ADR offering, will that take money out of Micron? U.S. investors, for the first time, they have the option. Out goes Micron, in comes SK Hynix. I think what happens is it's going to be a love fest for the entire industry. And SK Hynix will only emphasize that we got to be in this group. So it's going to be good for everybody. And I don't think necessarily people will pull out of Micron to go to SK Hynix. I think they're going to love them all.
That's interesting. And that's a good point, because I'm sure it's a point well taken. People may be worried about that. Are you going to sell Micron to buy SK Hynix? And you just answered that question. Paul Meeks, thank you. Freedom Capital Markets. Great to see you. Paul, thanks. Coming up.
watch live, Schwab Network, SchwabNetwork.com.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Harley Caden, and our podcast is slowing things down. We're going beyond these earnings to get to the
All right, so it's looking better. Apple and Microsoft turning back up, looking good.
Market Matters is for you. Subscribe wherever you get your podcasts. The market is moving fast.
Okay, we're moving back up now.
Join Schwab's panel of experts on Thursday, June 25th for our 2026 mid-year market outlook. From global energy spikes to volatility to inflation and the 2026 IPO landscape, get the insights that investors need for the second half of the year. Join us on Thursday, June 25th at 7 p.m. Eastern here on Schwab Network. Welcome back. We want to take a look at Qualcomm. Shares are up nearly 7% after the company raised its 2029 revenue target and revealed a new AI data center roadmap. The chipmaker anticipates $15 billion in AI infrastructure revenue by 2029.
Okay, there goes Apple.
$9 billion in non-handset revenue. That's double its previous goal. Qualcomm shares are been on the rise. They're up
Okay, Apple through VWAP and pushing a bit higher now. Man, a hammer would be lovely.
60, and yes, you see it right now at 210. And make sure you go to schwabnetwork.com and all of our social media pages. I had a great interview with the Qualcomm CFO, Akash Palwala, and we had a great conversation. So make sure you get that. In the meantime, let's shift gears here, looking at crypto, taking a closer look at Bitcoin, Ethereum, and more. The Crypto Report. Adam Lynch is with us, Director Equity Research, Schwab Financial Research. Thank you for being with us. I mean, first and foremost, look at Bitcoin, 58,000. A lot of folks are scratching their heads. It's not what they wanted to see. This
Okay, look at Microsoft. Microsoft, big rip off the low. Okay, 350 up to 355. $5. $5. That's $250 for a 50 delta call if you were good enough to get the absolute low. I mean, even a $2 move here would be great. Hold on one second. I got to get this. All right, gonna get my oil changed. Microsoft looking pretty sparky here all of a sudden off the low. So even if you caught a $2 move or even a $1 move off of this, $1 to $2, this is a $5, $6 move. Even if you got $1 or $2, if you got $2 off of this, I mean 2 points off of this, that would be $100 per contract. 5 contracts, you would have just made $500 on this move right here. Even if you didn't catch the low, put a stop underneath. All right. Always good to watch the evening session because you get these big moves on a 1-minute chart. You can make some nice coin just by being in the markets for half an hour, 45 minutes. Okay. S&P turned back up. Looks good. S&P turned back up. IWM coming off the low. S&P 500 coming off the low. Back above VWAP, headed towards 7,400. Oh, you're really annoying, Nicole. Come on, Nicole, get with the program. So it looks like shorts covering on Microsoft. The way this is running, looks like shorts looking for more downside. They're having to cover really a lot of people short on Microsoft, most likely. So, okay, we got that previous low right there. Microsoft with a previous low. Mhm. Previous low on Microsoft. Okay, there goes Amazon. Amazon's starting to do it now. Amazon, Ripper. Amazon with a Ripper off the low. Meta. Tesla. Tesla moving off the low. Tesla tends to be fun, a fun trade off the low if it starts to catch a bid here. Whereas 377, 378, you got about only about a $2 move back up to the highs if we can manage that. Tesla with a doji down here. Okay, Tesla with a doji. All right. Amazon's probably got a pretty decent move potentially. That's back up. The high's almost there. Okay, the high from this morning. This morning's opening price right around 233. So you got about a $3 move. That's $150 per 50 Delta contract. So 3 or 4 50 Delta calls. If we can get Amazon back through this area, that would make you about $500, more or less. Put a stop underneath this candle. Amazon. DASH. DoorDash. DoorDash off the lows. DoorDash coming off the lows here. DoorDash, higher to low. Okay, Uber. What's Uber doing? Uber. Coming off the low. Nancy Pelosi, her husband, disclosed that they own the 50 call for March 50 call. Uber, deep in the money calls. DoorDash trending. Okay, nice little pop in the S&P. Just got rejected. Amazon getting rejected right here. Amazon, S&P 500, right back into the range. You shouldn't be surprised to see that this is chopping around inside of the white area here. Purple above, that's resistance. Purple below, that's support. Positive gamma above and below, that's creating a narrow range for us. Understanding gamma can help your trading out quite a bit. Tesla, nice little bounce. Tesla. Okay, so far Tesla with a bounce. If it got back up to the highs, that's only about 3 points from here. Whereas Apple's got a long way to go. If Apple can manage more upside, okay, Apple's got a good ways to go here. We got about 8, 9, 10 points if we get some sort of a rally. Feels very overdone. I don't know. What was the deal here with Apple? Why did it drop off? On Mac and iPad price hikes? Yeah, I would call it an overreaction too. Just because they raised their prices. I mean, it's costing more for the raw materials, costing more for RAM, costing more for a lot of things. Seagate, Western Digital, you know, these solid state drives that go in these Macs on the motherboard. Yeah, I mean, yeah, why not charge more? I pay more for a Mac. I mean, a Mac Mini is about $600. That's not much. I use a couple of them. I have a couple of Mac Minis. So overreaction is an opportunity.
Nice little bit of a bounce for the markets. You're looking at the markets right now. The Dow's up 0.3%, S&P is up 0.2%, Nasdaq still down. You say, well, Sullivan, what's going on? That's not a big move. I didn't say it was a big move, but the S&P was down, so we've seen a bit of a turn higher. The Nasdaq was so close to being positive. We'll wait and see. What about the so-called Mag 7? Those are the names. I know Micron is not in the Mag 7, at least not yet. That's your big story today. Well, the Mag 7, guess what? Is not doing great. It's down 2% right now. So intraday, the Mag 7, not one of the good performers. One reason for this might be oil, and I know, listen, as the
CRBS, CBRS is also down again. What's SpaceX doing? SpaceX, SPCX. SpaceX needs to get back above 155.
Is one that should be avoided, and there are rumors, or at least some talk, that a ship may have been fired on as well. Any jumpiness in crude oil is going to do that. Kelly, crude oil up 2.6% might be a reason why even Micron 17% gain, stocks overall not really performing.
And welcome back to our special show here, CNBC Live from the SIBO. I'm in the SPX pit with someone who knows all the ins and outs of what happens on the floor. Not only all of these gentlemen, but CNBC options reporter Oliver Rennick. Oliver, talk me through this a little bit. What are you listening for?
Anything and everything. The best part about being here is that it adds a new dimension to the market. When you're looking at your screens, when you're pressing buttons, when you're watching things, being live here, you can hear the market.
Yeah, we can hear it running all the time. But what are they saying?
Yes, lots of buy, lots of sell. Today pretty quiet. The market's only changed by 8 points.
Yeah, market's quiet.
VIX 20 is pretty quiet. Okay. But this morning we went back and forth real quick, and I'll sit at my computer and I'll try and hear it, and I'll say that sounds like we're going up. Hey, look, we're going up.
But what's with the hand signals?
So then it gets pretty loud in here, right? So the hand signals are actually, they call them ARB signals. Only a few of them kind of survived and only really make sense when it's very loud. It's basically when people were in between pits, they need a way to communicate. Say, I need 1, I need 10.
And that's literally what
I need 100, I need 1,000.
This is 100?
100 goes across.
Okay.
1,000 if you want big money.
1,000. Okay.
And then you add it in. So let's say you want 60 on
Oh, 1,060.
Yeah, exactly.
Okay. It's like
So
sign
you
language.
see people shout things out, you hear things. This guy's doing push-ups every now and then. Like I look over, like
Is that a market signal or that's just?
I don't know. I think it's basically usually big sub like.
All right, SpaceX looking for a bounce. Apple looks like it wants to go again here. Apple.
Yeah, a lot. It's amazing. You see all the different parts of people moving around. You see the kid boss talking here. You hear market makers shouting out earlier this morning. A great example is I heard someone say, "Don't want that bid. That's the worst bid I've ever heard." The computer's not going to tell you that. You can't tell that to the computer. It's almost like being live on the helpline here as orders are coming through from New York, from anywhere. You guys have an opportunity to make sure
Oliver.
size is exactly what they want.
Which one's the call and which one's the put?
Call,
Put, buy,
sell. I don't want it.
sell. I don't want it. I don't want it.
Get it out.
I don't want get it out of here. Oliver, thanks very much. Oliver Reddick, our options reporter. And for more on all of this, the hand signals of the SIBO, by the way, head right over to our CNBC social page, find on TikTok and elsewhere. They did a great job with it. Right.
Okay, here goes Apple.
All right, you know what? I'm all about the hand signals, baby. I like it. In TV, sometimes we give different hand signals. I mean, it all depends. All right, coming up, we're going to help you try to make some money with one of the best investors in the world. That is Ariel Investments, John Rogers. We'll talk about tech, talk about Micron, talk about AI, whatever else is on John's mind. This is his town. We're just happy to be here. We're back right up.
All right, we bought some lows here. Apple continues. Looking good. All right, Apple looking for another push above this level. You can see these pivots from earlier this morning, right in this area. Trying to push through it right now. Okay, looks like an inverted head and shoulders, a little bit of a more construed left side. All right, I'm going to take a 2-minute break. I'll be right back.
Yeah, they're not great. I think, overall they're between $300 and $100. The one that I want to point out the most is to Apple's new MacBook Neo, because that's their brand new laptop, and the big kind of selling point of this was its low price. It started at $599. That was really good, and I got to use it. And look, it's a great laptop, and I think that that's a great entry point for a lot of people who are looking for a laptop. Now it's up to $699. It's like, okay, well, it's not, it's still a very good price for what you're getting, but it's
not as good as it was.
Right, it stings. I think, and if you look at something like the Air, that's up to $1299. Now, a while ago, Apple had raised the price, and then they brought it back down. Had nothing to do with memory shortage. It was just customer reaction. Now, though, they've raised that price up $200. I think one of the some of the others are $300 increase to the MacBook Pro on both 14 and 16 inch. The iPad, that's jumping about $150. We were looking at on both the 11 and 13 inch for the Air. Then you're looking at the Pro; those are also increasing in prices. So, it's these devices that are important to Apple. They're not being most.
Look, and so prices going up on iPhones.
So that's been a rumor for a little bit now that the next generation of iPhones will see a price increase. It's always kind of a rumor, and Apple has kind of engineered certain ways of increasing prices without so much raising prices. Whereas they'll say something.
Typically, they price. So what's unusual here is, as in my memory at least, correct me if I'm wrong, covering a lot more closely than I do. Don't the price increases usually come with product cycles, right?
Yes, yeah.
So it's a little bit unusual here that it's stuff that's on the market already. Yeah. It's not the newest generation. I mean, it is the newest generation, so it's it's not. It's not the introduction.
Yeah, yeah. That's usually how they do it, and the way they can couch it, kind of with the iPhone in particular, is they'll say, "Yeah, but we're giving you more memory,
right?
So it's offset. So it's a new starting price that's higher, but price of savings last year's, 12 gigabyte version or something like that. And
so memory costs more now, so
right, and I think it's those lower tier offerings that I think are going to pressure the most. Obviously, we're seeing that with the Neo, the Air, it's all the entry level ones are getting hit right out of the gate, and it's something that we're seeing across not just Apple but the broader ecosystem of laptops, tablets, smartphones. I mention this a lot because it's close to home. There's video game consoles. Those are, I think one of the wildest things is the original Nintendo Switch, which came out almost 10 years ago. It is now 9 years old. Is $50 more expensive than it was 9 years ago. It came out in 2017, so it's gone up.
Right.
So you look at something that you had in your, whatever your TV entertainment center.
Yeah.
It's now it's crazy.
Yeah, that is crazy.
And I think we're gonna continue to see this.
Low tick alert minus 800.
That it's going to be destructive to demand. If you look at
that's how the Apple shares are behaving today. Dan Onto out in a note today said that he says we believe the company is in a strong position to increase prices without sacrificing hardware performance and risking increasing customer churn because the company is focused on the high-end consumer. But we'll see.
Right, and I think that's one of the things is you don't want to see them lower the amount of storage that they have to offer or RAM or memory that they have to offer. All that's going to do is annoy people because then you're going to have a system that doesn't run the way you want it to. It's going to be lagging. You just spent this money on this, and you get it out of the box. And that's kind of what happened with the Windows PC makers. You get out of the box, and it's going to fly, and then a month later,
it sucks. People have high standards for their Apple products.
Yes.
Yeah. Thanks so much, man. Appreciate it. Coming up, how the protein craze is reshaping the packaged food industry. Hear that.
Apple's still trying to push through this area. Get above 282, should run a little bit more. I'm hoping for a bit more of a hammer. Institutions have an hour and 10 minutes to do whatever they're going to do. Doesn't look like much. It feels like a Friday. Feels like a Friday.
Americans' dietary habits have been shifting. 1 out of 8 Americans are now taking a GLP-1, and the Department of Health and Human Services has doubled the recommended daily serving of protein. They did that earlier this year. For a look at what this means for the packaged goods industry, packaged foods industry specifically.
Okay, so as of the close today, SpaceX will be part of the Russell 1000. Okay. So we'll see if this has an impact. And then the NASDAQ 100, July 6th, it looks like. Inclusion by July 6th. SpaceX.
But the trend around protein is a long-term trend in the food industry. If you go back over 25 years, there's been lots of ups and downs with dietary trends in food. Protein has been an enduring one, and it really comes back to consumers' interest in understanding what does protein do for me. It was in the days of kind of the gym moment for protein was about strength and muscle building. But now consumers associate protein with satiety, weight management, healthy aging, bone health. So that vast array of benefits that consumers associate with protein means we have a portfolio that we have a lot of opportunity to connect with consumers. So we do obviously a lot of meat at Hormel, we do poultry, we do pork, we do beef, we do nuts and nut butter. So all of those different proteins in our portfolio are opportunities to meet those consumer needs. And frankly, consumers want protein at all times of day. So they're
Sorry, that's tomorrow. Sorry. 26th is tomorrow.
John, I was talking to someone yesterday actually, and they were talking about perhaps the 3 meals a day kind of being over. Is that what you're hearing in the industry too? Yeah, I mean, the way
Google looking good here. Google looking better. All right. A few more stocks are showing short covering. Okay. I mean, not the best situation, but it's not the worst either. If you consider the equal weight index, you consider the New York Stock Exchange composite. That is 2,400 stocks on the New York Stock Exchange composite. Doesn't look bad to me. It's off the best levels of the session, but so is everything else. Cerebras is dropping off. Cerebras is at 169 right now. Cerebras. CBRS back down to the low of the day. Not quite getting there though, right? Cerebras looks ugly. So it looks like people are taking money out of tech, putting it into financials, industrials, transports, like those exposed to travel and leisure, like cruise lines. What's Royal Caribbean doing? Royal Caribbean, RCL, Royal Caribbean. Okay. Uber, the Pelosi's talked about Uber yesterday. They filed, I guess earlier in the week, they showed they had a position. The 50 call for March. Okay, it's deep in the money. That was a 90 delta at the time. We did pull back a little bit, so looking for Uber to follow through next week. Uber off the lows. Okay, so back below the 50-day. So this should probably be back up at 80 end of next week or thereafter. Test the 200-day. having a lot of inflows thanks to all of the visitors. If you're listening, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. If you're in the U.S. celebrating FIFA, the World Cup, that's pretty cool. The Scots were having a good time. I guess they have what? They're in Boston, the Scots? Yeah, the Scots were in Boston because the some politician was saying they drank all their beer. So they're definitely in Boston area. I guess at the stadium there, right? So anyway, travel and leisure, you got Royal Caribbean cruise lines off the highs, but traveling following through. You got the home improvement and hurricane season stocks like Home Depot. That's off the best levels of the session, but probably should be fine. It'll be 200-day, test the 200-day maybe tomorrow. I'm looking at this, looking for Home Depot to follow through over the next several weeks. Okay. It just moved above the 10 EMA 3 weeks ago. Just getting started. 50% retracement would be around 365, 370. This tends to run up during the months of May through October. Sometimes the whole entire period. Sometimes just June, July, August, September peaking out. Hurricane season in 23. 24, that was 24 when Hurricane Helene, Hurricane. Yeah, Biden was still in office. Hurricane Helene, Biden. When was that? That was the October of 24. All right, so that was Hurricane Helene. Okay, Hurricane Helene was in 24 over here, October. So it made a nice run up. Home Depot, 25. Very few hurricanes, I think, in 25 June. It ran up from June through September, peaked in mid-September, early September. It tends to roll over. Home Depot tends to roll over in the winter months for whatever reason. So it tends to fall off after hurricane season. But we have plenty of time. It's only June. You got July and August. This should continue. You know, put a small position in. I was telling my son we bought the calls. They were like $500 at the time. They were $1,000, over $1,000 this morning. So 100% on those. Looking for these calls to go 200, 300% maybe. I'll take profits off above 350 and then reassess what I'm going to do next. Probably buy some in the money calls. I have spreads right now, 330, 350. Anyway, that's a lot to digest. Home Depot, just looking forward to follow through. Apple's still sitting here. Apple.
76 summers, 6 best friends, all in about 15 great loves. Our most human moments should be celebrated with humans. Celebrate being human. Etsy.
All right, looking for Apple. I'd love to see a hammer by the end of the day on Apple, maybe even Meta, and a few other names. Some of you are watching Meta, Google, and Amazon. I'd like to see Apple do that as well.
Market Domination. I'm Josh Lipton, live from our New York headquarters. We're just going to close it down on stocks of trailing earlier gains. NASDAQ was negative. Dow Jones Jared Rivers has the first thing. Jared.
Thank you, Josh. We have a mixed market. I think the market's trying to make up its mind about Micron. Is it good for the entire market, or please tech, or not? We're going to get into that in a second. First of all, the Dow has given up most of its gains for the day. You can see a nice peak in the quarterly hour. We're still holding on to 116 points, or about 0.25%. NASDAQ, however, has been choppy most of the day. It's down about 1/3%. Meanwhile, the S&P 500 happens to be on the other side of that unchanged line, and it is up 10 basis points. Well, let's take a look at the S&P 500 equal weighted too. This is up quite a bit more, 0.6%, more than 0.5%. And that is because the mega caps are slowing the market down. I'm going to show you the Russell 2000, and I'll show you the mega caps. Small caps are about 1/31%. And here is the MAG 7 ETF. MAG's down 2.23%. Just want to show you a one-year chart really quickly because we have seen this number first. The first breakout from that number was roughly 9 months ago. So MAG 7 has gone nowhere over the last 9 months. Transport's doing pretty well. Semiconductors doing very well. We'll take a look at them too. But here's the intraday up 3.30%.
Oh man. That's the second time today that Thinkorswim crapped out. That's weird. And yeah, Thinkorswim crapped out just now. Twice today. Okay. I guess they don't want me to trade, huh?
One of these does not belong. That would be Micron, up 16.6%. And we've seen this play out here. Apple is raising their prices, and that ties into memory demand. It's not Micron specifically, but I think all of this complex is being a little bit priced based on the fact that somebody has to put the bill for all this memory, and Apple is passing that on to consumers. So a lot of red here. Here's Micron, but we got to move on. So I'm going to show you what's happening with the Dow. That industrial reading, so we're seeing a bit of action, a nice action here. Caterpillar's up another 5%. By the way, check year-to-date look at what's going on in CAT. It is up to 82%. That is another record high, and that is one of the best performing stocks in the Dow. And then Merck's up 3%. Healthcare doing well. United Health as well. J&J up 2%. But this has been a very difficult market for tech to kind of price in here. So I think we're going to get some answers on that shortly.
You sure will. Jared, thank you, buddy. Well, Micron is the big mover today. Let's take a look at the chart on Yahoo Finance's Alpha Space platform. I call this completely wrong, by the way, just so you know. Heading into this print, God's laughing. Heading into this print, I looked at this chart, and I mean, first of all, year to date, heading into the report, you were about 260%. All right? Still was bad for a second. If you look at 12 months, heading into this print, you were up around 700%. And I asked Scout, Yahoo Finance AI chatbot, for some context. Scout pointed out to me, heading into this clip, you were sitting around 160% above your 200-day moving average. In other words, deeply extended nosebleed territory. I thought no matter what they printed, they would sell it. You know what? I was dead wrong. This thing is soared.
You know, it's interesting how everyone has got the whole AI thing wrong for the most part. People are just like complaining about missing Micron. I missed Micron too. I sold at 530, but it makes total sense to me. This is, if it's changing as much as we have heard that it is, the build out of this AI, this is only the beginning of what we're seeing. And it makes sense that these companies could grow this quickly. Price to sales, margins, supply and demand. Everything is playing out right in front of us, and people are just looking at it with the old models in mind. And people aren't acknowledging what we're seeing, you know? Yeah, this guy's got it. This guy's got it right. He's talking about the build out and how people got it wrong or getting it wrong. So anyway, Watching Apple for a follow through. Yep, yep. 5 years of supply of back orders, I guess you could call it. Yeah, would like to get a little pullback though, Micron, just to get in. Thought we were going to get it. I thought we were going to get it today, but yet another pop. Okay, we still got 300 stocks advancing, so 3/5 of the S&P 500 advancing, 45 stocks on the queue, so we're losing a few as the day goes on. S&P, no follow through. S&P.
Lenovo, all these guys on the hardware side have had incredible. Cisco, all these companies have done incredibly well building out this infrastructure. Now, how that translates into additional dollars and services for the Microsofts, the Googles, the Amazons, those are some of the pieces that I think people are waiting to see. I still think there's great opportunity there, so I still feel confident about it, but you know, there's a lot of questions still to be answered.
What is it, in this year, what do you think maybe the biggest AI surprises could be in the next 12 months? Will it be in AI?
Microsoft looks like it's making a higher low right now. Microsoft, Apple pulling back to VWAP. Intel, no follow through, got rejected at VWAP. IWM sitting near the lows. IWM sitting near the lows of the day. Still trending.
You're in town with Qualcomm, by the way. Yes. They are now saying they want $15 billion in data center revenue by fiscal 29. Achievable as they now enter the space with likes of
Absolutely. I think the biggest surprise for me from the Qualcomm investor day that was the extent of what they're offering. So it's not just about a custom chip. They do have a custom accelerator. They've announced a new CPU, but they've also announced leveraging AlphaWave custom ASIC design business. In other words, they compete with the Marvells and the Broadcoms of the world to do custom designs for big hyperscalers. And in fact, while they didn't name names, they said 2 major hyperscalers have already committed to over $1 billion just in that business. On top of that, they have this new chip architecture that's of Qualcomm's own creation that they can leverage across a bunch of these things. And coup de grace, they added this company called Modular, software company run by some legends in the software industry who are creating a essentially software tool that would let applications, including those done for CUDA, run on other types of chips. So that theoretically breaks, you know, the bottleneck around NVIDIA and CUDA and what it does. So all of this stuff is going to take a while to play out. It's a very complex story, but the range of it was impressive. And then the numbers they started to drop, they did specifically announce that Meta is going to use their new CPU, and they had Satya Nadella from Microsoft on there talking about how they're going to work with them as well. So, you know, coming out of the gate with a expensive set of products and a pretty darn impressive set of customers got people excited.
You mentioned NVIDIA. How much has that company's competitive position shifted and changed, Bob, in the last 6, 12, 18 months?
Well, I mean, look, they are still the dominant player, and it's funny because this came up, you know, everything has to be measured these days against what Jensen says, right? Jensen says this is how stuff is going to go. As companies introduce stuff and they talk about stuff, they have to kind of describe, okay, well, how does this fit with, you know, the Bible according to Jensen? And what that says to me is they're still in that kind of dominant leading position. But look, everybody's looking for alternatives,
right? They're looking for alternatives on the hardware side. They're looking for alternatives on the software side. And you're going to see a bunch of folks starting to nibble at their feet, and it's already starting to happen. I think it will continue to play out. The question becomes, as all of these companies rise, the whole market rises, is it big enough to raise all boats? Right now, it seems to be that way. In a couple of years, we'll see how that shifts. So
Apple.
let's talk Apple too.
Apple rejected. No follow through.
Raise prices on select Macs, iPads, home devices, phones, electronics, quickly to the journal about surging memory rates. What did you make of that? Look, this was inevitable. And what it's finally done is all this discussion that seems somewhat ethereal around all the shortages in memory and the cost of memory, none of that really matters until it smacks consumers in the face. And nothing like Apple products going up by roughly 20% in a lot of cases or more that make people realize, wow, this is real. Like, this is going to impact everybody. Apple clearly had a huge stock of lower cost components. Now they're having to pay more for those components. They've got to pass that along. And it does kind of reset the price bar for everyone. In a way, I think you're going to find that
S&P pulled back, IWM pulled back. There's just no buying right now. Institutions are apparently not interested today. Got a little bit less than an hour to go.
So, all of a sudden, they don't necessarily have that big advantage that they've had. And I think there will be a bit of a hit. We'll see what happens. New prices go up in new phones in the fall. What do you think? I have to imagine that they held off on doing iPhone price changes here, but the easiest thing for them to do is when the new ones come out, they will simply come out at a higher price than previous generations have. I think that's the logical thing. Let me end here on Big Blue, IBM, another piece of tech. The timing is impeccable. Chip breakthrough, really. Yeah. New nanosecond stack architecture could deliver chips 50% better performance, 70% better energy efficiency. They do say production likely from maybe 5 years out, but why is IBM excited by this? What's the problem you're solving for? Why should investors be excited? Well, what's cool about the IBM deal is it rejuvenates Moore's Law, right? We all know about Moore's Law, this idea that every roughly 2 years, silicon performance is going to jump. And it's been hitting a wall, to be honest with you. And Jensen, for example, publicly said, it's the end of Moore's Law. And so all of a sudden, IBM comes out with this technology, which, like, let's be clear, IBM does not
Netflix turning back up now. Netflix trying to turn back up. Netflix. Day trade only. Looks like it could go a bit. Not a whole lot of upside. It's only 72 up to 72.80, 72.90. I don't see it doing much here. IBM. Outside day. Home Depot. DoorDash. Uber. All of these, looking for these to follow through. SNDK at the high of the day. SNDK trying to get back up to the highs of the week that we saw on Monday. Micron, Applied Materials, number 3 on the NASDAQ 100. Applied Materials, big gap up. Qualcomm. Qualcomm upgraded over at Morgan Stanley. Qualcomm announced a multi-generation supply deal with Meta for its Dragonfly C1000 data center CPU. Okay, so that's Qualcomm. Looking for that to turn back up. S&P, no follow through.
If you need help moving and unpacking, you could ask your cousin Casey who she hired last year.
Hey girl. Hey, what movers did you? Sorry, are you still moving?
Or here's a smarter move. Go with Thumbtack. The pros we know have earned over 14 million five-star reviews. For your next home project, try Thumbtack. We know homes. Hire the right pro today.
It's time to trade smart. Post BDT roll elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry, rapid orders, that let traders manage entry, profit target, and stop loss, all in one table. Taste trade.
Pressure relieving is the starting point, starting with a mission to improve people's deep sleep. Persistence on a pressure relieving road roots in the confidence in our products, with uniform support and less pressure, absorbing and breaking down body pressure, safeguarding blood circulation during sleep. Green and healthy, safe and worry-free. Multiple guards to create a perfect pressure relieving sleep. You need some excitement in the way that you sleep. You need Ego Home.
Niacinamide has been a trusted ingredient for more than 55 years. Our niacinamide 10% with zinc 1% formula boosts your skin brightness, improves skin texture, and supports your barrier. And it helps reduce excess oil, which can clog your pores and cause breakout.
Netflix still moving higher. Big move on CSX, rails, transportation, IYT, transports, back up to the highs, fading from the high. PACCAR, CAR, PACCAR. Okay, S&P 500. S&P below the 50-day moving average. Okay, I do have SPY put flies. I have not added to those SPY. For now, it just looks like we're going to stay in this range. Volatility should pick up at the end of the day with the red area here, above and below. Beyond that, you got purple above that and purple below it. So that's support and resistance. It's probably going to stay inside of this range, but become more volatile. Hedge flows turning down now as dealers are selling.
Semiconductor ETF also taken higher as the latest earnings results reinforce the narrative that capital spending on AI continues to accelerate. And lastly, Qualcomm is seeing shares jumping as the company makes a big cash in on the AI boom. Qualcomm announced to move beyond smartphones to data center products, chips, servers. The company forecasting $15 billion in new data center revenue. Meanwhile, the company also raised its fiscal 2029 non-handset revenue target to $40 billion. That was about 2 times the prior target. Well, Ford is celebrating a major quality milestone, being named the #1 mainstream brand in J.D. Power's initial quality study.
That finds his price some rain.
Got a lot of negative gamma right in this area. 73.55 down to 73.45. As prices move into that area, we're pulling back.
We worked really hard for 4 years to be an overnight success story. I mean, it's been an incredible journey over the last
Ford. What's that doing? Ford. Haven't looked at that in years. $14 a share. GM. GM.
And all the others that import a lot of their vehicles from Asia, even our domestic competitors that import over 1 million vehicles a year, with American workers, an American company, to do that is a breathtaking achievement. First time in 16 years. I'm so proud of the team, and this is an American success story.
You mentioned, besting brands like Toyota and Honda known for that quality level. What do you think flipped the switch there that sort of made this sort of happen with the distribution policy?
Well, we were in crisis, and but we worked hard for the last 4 years. This is not an overnight success story.
Most of these stocks are in range-bound patterns.
But what really made the difference is a culture change at the company. We decided to put quality first. Now that seems really simple, but you can only imagine what that means in all of our plants. We manage quality as the highest priority in the company. You go into any of our plants in the U.S., you will see our workers completely obsessed with all the data. Every torque wrench is measured. We look at every defect and understand why it happened. We go all the way back to the suppliers and our engineers. We have armies of our engineers in our plants every day working with our factory workers to make the quality of our designs better. All of our supply chain team are in our suppliers looking at their quality. This is a story of paying attention to details, knowing exactly what world-class looks like. We knew exactly what it takes to beat Toyota in every part of the vehicle, designing it, the parts that go into it, and the assembly of the vehicle, and including all the software testing. That is the obsession with quality is really what happened here at Ford.
There's multiple steps, right, from supplier to the plant floor, the dealer lot there. Is that why it kind of took some time to sort of figure out all these issues? Is that why it was sort of people were asking, why didn't this happen sooner?
Oh yes, I mean this is an achievement that really it's just almost impossible to comprehend. If I could take all the listeners and viewers and bring them through all of our U.S. plants, and you see how complicated it is to make a car, how many things need to go right to beat Toyota with an American workforce, is really something amazing. And it's absolutely that obsession. Does it take time? Absolutely. We had to understand and change all of our systems, all of our supplier systems. All of our engineers had to approach their job differently. And it took time to roll that all out. We continue to make progress over those years. Now what we're seeing is our warranty costs are going
All right, we're probably going to move back up into the range now.
down. So this would be a big financial story for the company too.
When you mentioned U.S. production, and I got to talk about things like tariffs, and we have USMCA negotiations coming up in July. Talk to me about how important, I know how important it is for Ford is U.S. production, but also what does that sort of say about, affordability here in the country? We're talking about tariffs and Americans sort of struggling with, making those payments.
Well, Ford's made the best-selling vehicle in the United States for 47 years, the F-150. So we know a lot about affordability, and we know a lot about, American customers. Well, I would say we're entering a very important period. We did work with the administration to minimize our tariffs, but at some point we had some of the biggest tariff bills, even though we make almost all of our vehicles in the U.S. We make more vehicles than anyone else in the U.S. We export more than anyone else. We have the most factory workers in the U.S. So we're obviously the most American company, and to have a big tariff bill didn't make sense to us. And a lot of it was imported, parts, because we have to make our vehicles affordable if we make them in the U.S. Our labor costs are higher here. One way to offset that is to import parts that are more affordable. We worked with the administration. We found a good outcome, but here we go again with USMCA.
Cerebrus back down to the lows.
Negotiation. We designed the entire industrial system in the U.S. around
Mexico and Canada, between parts, shipping powertrains across the border, and this will be very important. Even for Ford, it's more important than our competitors because they import so much.
All right, these pullbacks we're looking at as opportunities. So if the S&P does close below the 50-day, it's very likely that we're going to see lower prices, I would think, into tomorrow, maybe next week. Just looking at rebalancing, a lot of rebalancing. As we see a lot of rotation into travel and leisure, financials, industrials, healthcare, utilities, material stocks.
Where this new product, new truck for Ford sort of fits in, right? Absolutely. I got to tell you, I think we're on the eve of a new silhouette. You know, utilities kind of came on the market 20 years ago. Now they're the biggest segment. You know, pickup trucks have always been part of America, but they're expensive. An F-150 or even a Ranger, they're real expensive. We lead the market. But boy, have we found success with Maverick. Maverick has been shipped.
All right, we've got about 32 minutes to go.
Please join me in welcoming Sundar Pichai. Well, from cheers to walkouts, scenes of AI anxiety across college campuses as graduates worry about the impact that technology will have on their futures. The nation's oldest public.
Microsoft had a nice little rally. They keep selling the rallies. Every time we get a little bit of a upside, they're selling it. Google pushing back up. I wouldn't be surprised to see Google push a little higher and sell off as well. Apple off the best levels of the session. I still think it's overdone on Apple's part. The selling, looking for a bounce. S&P 500 lower. Going to close below the 50-day. Okay, you can get these butterflies for $2.30 now. $200.30. $230. $230 these put flies are going for now. Really slow day today. Everybody's pointing it out. SpaceX. Still basing SpaceX. We talked about SpaceX a little while ago. Looking forward to stay in this range.
So our state is growing so rapidly. If you want to feel all, I'll tell you our upcoming freshman class is the class of 2030. And that's the year the census says North Carolina will be the seventh largest state in the country. So we can't grow as fast as our state is growing, but we exist primarily to serve the state of North Carolina. So we have to try to grow.
Okay, S&P turning down. End of day. S&P testing the lows of the midday. Swing low. We had a swing low this morning down here. We're going to close below the 50-day moving average at this rate.
Circumstance, and because we're increasing enrollment, because we have huge demand for STEM courses, which need modern facilities, because the town of Chapel Hill is constrained from a housing standpoint, we have not just the ability, but I would argue the obligation to use this land to try to meet those needs. I read that you want to lean even more into sports to increase the profile of the university, and I thought to myself, is that really possible? I mean, UNC basketball is as premier as it gets. Coach Belichick on the football team, like, what more can you do? Proud tradition in sports in Carolina. Not the most important thing we do, but easily the most visible thing we do. And sports have gotten more important.
S&P threatening the lows here.
You mean through NIL? Through NIL and all of the other things associated with that. Coaches cost more, facilities cost more, especially what you got. Well, and so everybody in a job like mine is trying to figure out how to raise more revenue for everyone. Where do you come down on the whole national?
There's absolutely no volume across the board. Very few stocks are seeing any volume. It's like very slow. Once again, we need to check RSP. Did make a new high. RSP did make a new high. It did pull back in, but it is bullish. It's above the 925, 921 day, and 50-day moving averages. RSI is rising. So it's the tech stocks, the New York FANG, the big tech that's doing this right now. That's pulling the S&P lower and the Qs. So just keep that in mind. Qs are off the lows. No. Back down to the low. Okay, off the lows of the day, but threatening those levels again into the close. IWM at the lows. So the 10-year yield did manage to rise, the 10-year. Okay, if we're going to manage to get any follow through, we would need to see this continue to slide down those lower Bollinger Bands. So that's left to be seen going into Friday. 10-year yield lower, IWM should be higher tomorrow. Okay, so S&P 500 still sliding. S&P.
Day and night for 13 years working on this game, so it's a $1.5 billion development cost. It is very likely 200 hours to complete, which means that you're getting a lot of value for your $80. And I think I read a stat that fewer than 25% of people who buy Grand Theft Auto ever finish the game. So you're going to be buying something you cannot finish, which means plenty of value for your dollar. So people have been waiting for it. I think I started reading about it coming out imminently back in 2017, and that's kind of been annual ever since, and finally we're getting it.
What did you make, Michael, with that $80 base price?
They left money on the table, and you know, I think we're going to talk about Xbox later. There's greed, and then there is value.
the Take-Two guys, and I'd say especially the Rockstar guys, but Dig-Straw's known.
Take-Two launching Grand Theft Auto 6, which is supposed to be a big deal from what people I know are talking about. GTA 6.
Most games have been 70 for the last several years. There's been a Mario game out that was 80, but they could have charged 100, and nobody would have even blinked. And I think they're going to sell 30 or 40 million units pretty quick. So an extra $20, they would have made $700-800 million of incremental cash. This should be viewed by consumers as a generosity move. I think that it's a Rockstar acknowledging that the consumer is feeling squeezed by gas prices and overall inflation elsewhere. And I think they really would like to give as many people as possible to play this game as rapidly as possible. So they're pricing it at a price that anybody who's thinking of buying it will have no problem buying it that first week.
So a quick 30 to 40 million units. I mean, what ultimately could this mean for Take-Two's financials, Michael?
I think the number that people
Well, there's no bid in the markets. We continue to see selling into the last 20, 22 minutes of the trading day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com with yet another boring trading day. We've had 2 in a row. Today is the 3rd. Tuesday and Wednesday, dojis, spinning tops. Today, pretty large candle, almost a bullish, bearish engulfing. We're below the 50-day. So I would plan for more downside. I would be hedging. You could also trade SPXL, okay, XPSX. Okay, you could trade SPXS. If this loses the 50-day, this should appreciate. Okay, SPXS short on the S&P 500. You can do SQQQ if you think there's going to be more downside. I still haven't added to my SPY put flies. Okay, SPY put flies. As I mentioned earlier, I have these SPY put flies. The 700 put, I've got 2 of those short and 1 each wing. I have 5 total put flies. So the way you construct the put fly is you buy a wing, 2 wings, you buy the outside wings, and you sell twice as many puts on the middle. That creates a fairly inexpensive hedge. In this case, I'm long the 725 put, I'm long the 675 put, and I'm short 2 of the 700 put. That creates a relatively inexpensive hedge. If we start to ease down over the next couple of weeks into the end of the month and then bounce, this will ease down towards the 700 put. The 725 will start making lots of money with a maximum profit. If we were to pin on expiration, if we were to pin near 700, maximum profit would be $4,400 per contract. So I have 5 of those. Markets are just acting very lethargic. Apple just rolled over again. All right, so we'll have to see if tomorrow we come in and Apple's even better bargain. Apple has a 200-day just below. Maybe it goes to the 200 first. So if you're buying anything on the long side for Apple, make sure you have enough time. If you're trading options, make sure you're out at least August or September. There's a lot of stocks that are moving that aren't in the same arena, like Home Depot. Home Depot, this is bullish, showing relative strength to the markets. Again, remember, it's S&P 500 is heavy weighted 37% of the weight is in these big cap tech names. So if you look at RSP, it doesn't look as bad. Yes, we're off the highs of the day, but we're up here above the 5, 9, 21, and 50-day moving averages. New York Stock Exchange also doesn't look bad, okay? We're trending. It's a gradual trend. If you know linear regression, you know that the majority of this is up and to the right. You're in the upper half of the linear regression plot, not in the lower half. So the odds of continuation, okay, are looking good. RSI is rising. MACD, stochastics turning up somewhat. That's kind of flat though, really. So there's really not a whole lot to be concerned about. Just hedge, because we're probably going to fade. It's going to make a lot of people nervous. Some people will probably sell. Okay, there goes AMD popping up here. So this looks pretty good for the New York Stock Exchange, okay, which is good for the markets. Not so good for the S&P, which is weighted very heavy in these big cap tech names. It's sitting right at the 50-day moving average, just below the 50-day. We're 8 points below the 50-day. AMD just turned up.
See that?
Well, they both could be correct. I think inflation is what's making the Fed most uncomfortable right now. But we just got a resolution or an interim resolution in the war in Iran, and we're an opening of the Strait and oil prices diving. And I think the Fed ought to and will take some time to see how that lower oil price feeds through and bleeds through the rest of inflation. They're very aware you've got a capex boom and you've got resource strains, and we're seeing that across the economy. But this oil price decline will be helpful, and I think it gives them a reason, at least for a while here, to kick the can and keep assessing and reassessing. And I think that's what they'll do.
Do you think the market's overreacted to the most recent dot plot?
May have, yes. So here's how they might have overreacted. The dot plot got submitted literally into the weekend that this interim agreement MOU got signed. It probably is more stale. Dot plots always have the risk of being stiff. This dot plot is probably stale already, in that you're going to see some improvement because of headline oil moving down. We just don't know how much. And so the market didn't know. All it had to react to was the dots. And Kevin Warsh's main message was, I'm not going to give you much forward guidance, but I am going to tell you that, I'll paraphrase, come hell or high water, we're going to reach price stability. So the market took both those facts and said, you know what, we ought to assume there's going to be a rate increase by sometime in the fall. That might be true, but it might not be true. And I think we're just going to have to wait and see.
I mean, Eamon Javers, early on in our hour had some headlines about the MOU and about some new developments related to the Strait and a position that Iran seems to be taking. What if the MOU ends up not being worth the paper it's written on, and that the market got a little over its skis on assuming that this whole thing was coming to an end, where in fact you could get another rise in oil prices and this was a false move lower?
It's possible. And the truth is, we don't know. I think people in the market are assuming that it's in the interest of both sides to keep
Crude oil continues to slide.
the revenue. The global economy, the U.S. wants lower oil prices, but we don't know. And so we're just going to have to see how this plays through. But it's worth being patient I'm at the Fed, it's worth being patient and give it a little bit of time. That means I would probably want to not move unless you get some adverse news. I'd probably want to keep assessing through July. I think by the time we get to September, my own view has been, let's see where we are. Let's see if we're getting enough improvement.
This is Fed Williams speaking.
And we'll just have to see.
Could you envision a scenario in which a Warsh-led Fed, as his first move, actually hikes rates like the market seems to be pricing in?
It's not. Let's put it this way. There's a lot of guesswork being done right now and a lot of dispersion on Wall Street.
Yep. Exactly my feeling. Everybody's speculating. Oh, this could happen. That could happen. What if? I hate these scenarios they keep playing with. Meanwhile, prices are moving lower. U.S. crude oil is moving lower. Inflation is actually reducing. AAII bull bear coming off of a very bearish look, starting to become more bullish looking. Rate of change is turned up. What happens if? What if? You hear what they're talking about? What if? What if there's a nuclear holocaust? What if there's the sun stops shining tomorrow? It's crazy. Just watching the S&P. Looks like we're going to close down here below the 50-day. I would maybe bite the bullet and buy a few of these hedges. I don't like doing it at the low of the day. Intel hanging out near the highs of the week. Intel near the highs of the week. We did come off quite a bit today. Looking for this dip to get bought. MACD stochastics turned up. All right. All right, we're definitely below the 50-day.
Just put, even if you can just put a little bit automated directly from your paycheck into a savings, into investing, make it so that it's simple for you to do and you don't get rattled. Because it's when people start having to make those, the perfect market decision, that's when they're afraid to do it and they second guess themselves. And so if you can automate things, it really does bring down the tension a bit and brings the heat down and makes it possible for people to just invest, because the time value of money is essential, and you can, if you have that horizon, ride out these ups and downs with growth ultimately down the road.
Very great to see you as always. Great story. Thank you.
Thank you.
Well, the public market for humanoid robotics is expanding. Agility Robotics en route to transition to a publicly traded company. Major AI players such as NVIDIA, Amazon, and Foxconn are already getting behind the company. Peggy Johnson, CEO of Agility Robotics, joined me here on set. Peggy, it was great to see you. So let's first maybe just explain deeply to us your roadmap.
Okay, S&P 500. S&P 500.
Okay, well, thanks for having me, Josh. It is the roles that humans actually don't want to do. It's more tasks. It's
Exponential moving average.
physically challenging type of thing, sometimes dirty, sometimes dangerous.
50-period EMA is right below prices. 50-period SMA prices below. Still a possibility this bounces in this area, but we've been spending the past 3 trading days right here because the New York FANG components. If these get a bid tomorrow, that'd be a different story. If Apple catches a bid and we get Amazon, Google, Meta all up, then yeah, we could see this bounce off of this level. If we can't get those New York FANGs to follow through, that's the critical component in my mind, because junk bonds are hanging on. They're just below. I mean, our Doji hasn't really done much. 10-year yield looks good. I don't see any reason to be panicked about the markets. I would just hedge. The 10-year, while it did bounce, it's sliding down that lower Bollinger Band. RSI is moving lower. MACD stochastics are bearish. If this was a stock, would be exiting. The New York Stock Exchange, we've already beat that to death today, but the New York Stock Exchange, that's not giving us a batten down the hatches look. 920, 50-day, all up and to the right. S&P equal weight, while it's not at the highs of the day or in the upper half of the daily range, it is still pretty good above the 920 50-day moving averages. Those are up and to the right, bullish. Sector-wise, okay, we've got these sectors. All of these sectors are seeing strength, which is pretty cool. All these sectors seeing strength. Okay, here's the equal weight index at the highs. At the highs of the week, off the highs of the day. New York Stock Exchange, just talked about, it's trending up and to the right. 10-year yield lower, sliding that lower Bollinger Band. Junk bonds hanging out right near the 50. 50-day is flat. And the S&P, this is the 50-period EMA, exponential moving average. We're sitting right on top of it. I don't see anything to be really particularly scared about. It's unpleasant to have down days. We don't want to be up every single day. We want every single position to be doing exactly what we had planned. There goes Intel back up to the highs. So I don't really see a reason. Anything other than a hedge at this point, that's all I'd be looking at. Okay, here goes Intel, moving back up above VWAP. We've got 6 minutes to go. Exactly 6 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're coming into the closing bell, 6 minutes away. It is Thursday, June 25th. Tomorrow is when SpaceX joins the Russell 1000. On the 6th of July, SpaceX will join the NASDAQ. Okay, so be looking for some buyers. SpaceX, looking for some buyers. Need to get back above 155. All right, so I don't see a lot of reasons to be that concerned about the markets. It's unpleasant to have down days for sure. It's more fun to be up every single day. Micron. Okay, just off the highs. Okay, folks, we got about 5 minutes to go. 5 minutes to go. The hedges are pretty cheap for SPY. One more time on SPY. SPY worse for wear. If you're interested in SPY, I have these put flies. I have 5 of these. You buy 5 of the 725s. You sell 10 of the 700s, and you buy 675. 5 of the 675. So total, you're going to have 10 of these wings, and you're going to have 10 short in the middle. I'm sorry. Yeah, 10 short in the middle. 5, 5, and 10 in the middle. So you always sell twice as many in the middle. You buy the long 725 and 675 in this case. It costs you about $230 per fly. So I'm into it for a little over $1,000 with a decent hedge payday. If for some reason this does pull back, it does help cushion my downside. I have a lot of longs that aren't doing what I would hope for them to do. 3 minutes, 30 seconds to go. AMD turning back up. AMD turning up. Intel turning up. Yeah, there you go. Santoli's telling you exactly it.
We'll see you top of the hour in about 3 minutes or so. That's Mike Santoli. Oliver from SIBO, where's the options action today?
It's much more interesting than it looks, judging by the S&P's a little changed right now, Scott. That might be an important signal for the next few days before options expiry on Tuesday. We had a lot of catalysts today that could have moved this market. Micron's huge rally, the GDP inflation combo, Apple getting killed, but no, the overnight rally was sold, and the dip, which was 3% high along with the Qs, got bought. That might be because market makers are long gamma, which means they benefit if the market makes sharp moves, which means they take profits on big swings, and that keeps the S&P pinned to a range, aka buy the dip, sell the rip. Traders have talked to suggest that mid-range might be between pretty much 72 and 74, which is where we're at right now, 73.50. But beware, that could change quickly when the current batch of options expire on Tuesday. And volumes right now do look a bit elevated, about 30% above the average, with puts a little more popular than calls right now, Scott.
All right, Oliver, thank you very much. By the way, special bell ringing at SIBO today. Oliver's going to join a host of CNBCers, Brian Sullivan, Kelly Evans, Bill LeBeau, Rick Santelli, our executive editor, David Cho, along with the CEO of SIBO, Craig Donahue, as we close today's session. We're looking forward to that. 4:15 today. Do not miss it. Julie, what's happening in this market, do you think?
Well, this is a market that we think is quite set up to test conviction. We have this flavor of market leadership in specifically semiconductors and memory chip leaders in particular. This is a structurally more volatile flavor of tech than we saw in the Magnificent Seven for the past several years. And you pair that with an astonishing repricing in Fed expectations, not just the what, but the why of why the Fed might be hiking next. And you have this environment which is candidly a recipe for volatility.
Does it feel to you like the mega cap trade is going to be on a prolonged pause as you have some rotating around like Mike Santoli was talking about?
You know, it might not be a prolonged pause, but it might be an environment where investors have to decide when they come back to pure profitability, pure quality. And that is honestly mostly found in the Magnificent Seven as opposed to the more volatile, the more cyclical semiconductor stocks. It's also a segment of quality which is more found in the Magnificent Seven than, for example, the likes of the expected and ongoing IPO wave where we have cash flow negative.
All right, so that is a little push higher for Intel. I got a hard stop. Got to go outside and do a few things in the yard. Have a great evening, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, June 25th at the closing bell. Have a good evening, everyone. Take care. We'll see you tomorrow. Ciao.